All right. Hello, everybody. Welcome back to another market close. Tomorrow, the market is officially closed for the entire day. So, what better way to end the midweek cycle of this week's trading cycle than on a pretty green day? I mean, we thought yesterday was a green day. Again, you did not have to wake me. You did not have to up me the wake. I messed this up. You did not have to wake me up when September ended to know that it was a green day yesterday. I'm still sleeping, I guess, in September because it's a green day. So we don't have any market open or market close tomorrow. I might still go live and just get a guest on and we'll just talk about some stuff during the middle of the day. But we'll have a little bit longer of a market close today to discuss what's going on, what's happening in the markets, and how the markets are turning out. I think the story of the day, obviously, is Palantir. Now, we did hit $26.03. We hit that level, stayed there for about 30 seconds, then came right back down. It's okay. Kind of expected it to get some resistance at that level. But the fact that we got there, I think, was very promising. 25.84. I will have a full video coming out a little bit later in the day, the traditional Daily Palantir episode, talking about all the reasons why I think we hit 26. I mean, I'm going to talk about it in the stream as well. But like the point is there's a variety of macro reasons that's happening. And there's qualitative reasons for why I think Palantir is having a relatively good day. As you can see right here, the divergence between Palantir and Snowflake is indeed happening. Snowflake right here down 3% on the day. Palantir is up 3% on the day. There is a reason for why one is going down, one is going up. All of SaaS is not having the greatest day. If we go to SaaS right now on the left-hand side of my screen, you will see relatively mixed. Mongo's down 2%. Atlassian's down 2%. Salesforce is up a little bit. Oracle's up 3%. Confluence down. Snowflake's down. Datadog is down. Twilio's down. GitLab is down. Zscaler is down. Intuit's up a little bit. CrowdStrike's up. CrowdStrike had a phenomenal couple weeks. ServiceNow is up. Cloudflare is up. And then Adobe is up. Adobe had a good earnings. So it's kind of mixed across the board. It's not all of SaaS going up or down. But in terms of the divergence between Palantir and Snowflake, Palantir now $57 billion market cap, Snowflake $42 billion market cap. At least today, the market has decided who they want to bet some of their dollars on. So that's what we got going on in Palantir. We're going to talk a lot about what's happening there, why that's happening. Mag 7, the other big headline of the day, which is probably a bigger headline. I mean, Palantir to 26 is my headline, but for the entire market's headline, Nvidia here, 135. Nvidia as well hit 136. I did make some moves today in the market. I'll talk about the moves I made as well. But Nvidia 136 is just incredible. I mean, it's just incredible. It's hard to explain, but if you look at some of the metrics, it's still cheaper than companies like Microsoft if you cherry pick the metrics, and it's incredible. Trailing 12 months revenues are 79 billion. Valuation now 3.33 trillion. It is the most valuable company on planet Earth. The company is currently growing at 262% year over year. It's up 75%, 175 year to date, and after its last earnings in the 10-for-1 split, it's up 43%. I found a picture of Jensen Huang with the Earth behind him. This is absolutely Jensen Huang's world, and we're just living in it. I mean, it's just absolutely incredible price action to see in the context of Nvidia. So let's talk a little bit more about what's happening in the macro price action, and then we'll keep going from there. So first of all, I mean, let's start off with Palantir. Why is Palantir going up? And again, we'll talk a lot about different things that are happening, but some of my basic arguments for why Palantir are going up, and quite frankly, it's just one basic argument. Nvidia's up. And I know a lot of people hate to hear it, but Nvidia leads the AI market. Palantir is deemed so far as an AI play. Obviously, most people in the chat and myself who have been longtime shareholders of the company, we believe it's an AI play. The market, I don't think, is fully priced that out or figured it out, and that's okay, right? That'll take time. The growth has got to get there. But if the market is thinking Palantir is the beneficiary of a lot of Nvidia's demand, then Palantir is going to get the benefit. There's a reason why a company like Snowflake is not getting the benefit on a ripping hot green day like today. The market is not assuming they have that broad AI moat that potentially Palantir has. Now, the catalyst for why Palantir is being assumed as an AI play, I think, was AI Pecan. I think was that recent government contract we got. And I also think was the market starting to figure out that a lot of the Salesforce numbers gave an indication that maybe SaaS is not dead, but it's definitely not going to have the massive tailwind, at least in the short term, that AI is those companies have promised on the backs of AI. Whereas Palantir might. This is why Q2 is going to be one of the most important earnings for Palantir, because if they cannot capitalize on proving to the market they are not Salesforce, they are not Snowflake, they have real AI growth, the market's definitely going to punish them a little bit, you know? And so I think from that perspective, Q2 is going to be important. But 25.87, that's what we got going on with Palantir. Aztec says, so Amit, you don't think there is an AI bubble? I have been pretty clear on this show, I don't think there is an AI bubble, but like, for example, and we were talking about this yesterday, AMD struggling today because there were some reports that there was a hacker that got access to some news. That's why it's down 2%. When AMD is looking at the year-to-date chart, or let me get it right here. Yeah, when AMD got to 227, I said this thing was incredibly overvalued because if you just look at the fundamentals and the numbers, it made no sense. So at 227, yeah, it was bubblish in that sector. But a company like Broadcom growing 43% year over year with AI revenues exploding to the tune of 3.1 billion out of the 12 billion they got last quarter, increasing their guidance by 1 billion. That's not a bubble. It's down 1% of the day because it exploded over the past couple of weeks. But that is not a bubble, in my opinion. That has a lot more room to run, especially if the AI infrastructure is going to continue to get built out. So in the context of bubble, do I think Nvidia at 136 is a bit crazy? Yeah, but it's more so crazy because of how it's done this year. It's not more so crazy because the valuation is insane. I mean, like the PE ratio of 55 and you're getting 200% year-over-year growth, whereas Apple PE is 33 and you are getting 0% growth. Oh, by the way, speaking of Apple, so my short, in short, I don't think it's a bubble. Some parts can get bubblish. I don't think AI in general is a bubble. Apple decided that the Vision Pro is going to be discontinued, at least the second version of it. So the information reported today that the Vision Pro, because of slowing demand, Apple is only working on a cheaper version of the Vision Pro. They are not working on the Vision Pro 2. Reuters also confirmed that news story a couple of hours ago. So, I mean, look, when you look at Nvidia growing at 262% year over year with a 55 PE, you look at Apple's latest product, it cannot grow. And it did not take a rocket scientist to know that when you go into the stores and no one's in the lines to try the Vision Pro, and by the way, no one's paying $3,500 to wear this on their head, then yeah, that's a product that's not going to work. So instead of focusing on the next generation of this, which is probably why Tim Cook has not been talking about it in any of the earnings calls, you have to literally Command F and you would find one mention of the Vision Pro in the last earnings call. That's probably why they're not working on Vision Pro 2, but they're working on a cheaper model. I personally, you guys know me, I don't believe in the category as a consumer use case at all. I just don't believe in it. I don't think people are going to wear these every day. People are like, oh, wait till Gen 2, wait till it gets cheaper, like wait till it gets more thinner. I don't think that's the world we're going to live in. And if I'm wrong, then I'll buy a Vision Pro and I'll communicate through my Vision Pro glasses. I just have never been a fan of that. Zucks is obviously one here with Meta at a $500 price, but I do think there's a lot of enterprise commercial applications. For Jacobs with Palantir said, hey, here's how we're using the Vision Pro. There was a bunch of military demos I saw at AIPCon in terms of Taiwan scenarios, simulated scenarios of how you would communicate with different people across the world. I think there's a lot of Panasonic. That was another use case. So there's different use cases for it. But the point I'm trying to make is if Apple gets a premium of 33 on a PE and there's not growing, and one of their biggest product categories is basically done, and and they're not going to focus on anymore, they're going to pivot all to AI, then do we think Nvidia at a 55 PE growing triple digits is crazy? I don't think it's crazy. I don't think it's crazy. And so that's what we got going on right now in the context of Nvidia and Apple. Philip says Nvidia is always traded at 50 PE. I think last quarter, right before the earnings, it was at like 43. But I mean, yeah, I mean, you could take away 5 or 7, whatever. Like, yeah, it's always kind of traded at these levels. And I think anyone calling Nvidia Cisco, I don't know, dude. There's a lot of bears today calling Nvidia Cisco. We talked about yesterday. I saw a headline that, so I saw 2 headlines. Number one, Nvidia replaced Nvidia replaced Enron in the S&P 500 back in the year 2000. So when they did the rebalance, Nvidia was actually replacing Enron. On top of that, Nvidia replaced Microsoft as the world's largest company today. Cisco at one point replaced Microsoft as the world's largest company as well. And there, let me put up this headline. This is from March 24th, 2000. Cisco was above Microsoft. I think the argument, I understand where it comes from, Nvidia, Cisco. I just think that if AI is much more valuable in terms of the access that 5 billion users are eventually going to have to it and the amount of data centers that are going to increase to be able to facilitate that demand, then the build for AI is not going anywhere. AI demand's not going anywhere, whereas Cisco was just not one of the more important companies in the internet age. They were for a little bit, but they obviously were not going to continue to be. I don't think it's that obvious to say NVIDIA is not going to continue to be one of the most important companies. And that's why we're getting a massive rally on NVIDIA, and it doesn't seem like that's going anywhere. Let's go to CNBC. Let's see what they're saying about rate cuts and the Fed and this macro, and then we'll keep going from there.
Point of view on rate cuts was interesting. The idea if they do cut, it's going to be bad. It's not going to be for the right reasons because inflation's coming down. It's going to be for the wrong reason. And right now they don't need to do anything. The economy is in good standing. What do you make? What do you make of that?
Well, I think the Fed does want to cut rates. I know as the investment community, we would like to see them, but I agree with Keith's point. And what we shouldn't maybe be asking isn't when they cut rates, it should be why they cut rates. So if we look at a situation where they're cutting rates because we went into a recession, that's problematic. They can throw as many rate cuts at us as they want. It's not going to save anything. So this is a very thin needle that they've got to thread. I do think they're going to cut rates one time at the end of this year, but in the longer term, whether it's November, October, December, February, it doesn't really matter. It's affecting short-term trading.
It matters, though, I suspect, in the kinds of stocks that you want to position yourself within, right? He talks about the mega cap names for obvious reasons, because they've done so much better than everybody else, even at a time where you have an investor like that who is looking far beneath the surface, looking for value. But it's no accident why the biggest stocks have done the best. Is that just the way it's going to be until we get even more clarity on the idea and timing of the first cut?
In the short term, absolutely. And to Aaron's point, we're looking for breadth in this market. We've been hoping for it for 2 years, especially when you run a diversified portfolio like we do. You can only have a certain amount of money that you can throw to the big tech trade. The rest of the market hasn't been participating in any way, shape, or form. And that's kind of 2 years running now. So I think if we look at rate cuts in 2024, markets will be positive. But if you have the ability to stay in these big names, I would do it.
Aaron,
So again, and we're going to watch a clip from Goldman Sachs in right after the bell. I thought it was a really good clip. Their head strategist said why they put the S&P to 5,600, and they walked through their logic. TLDR, their logic is the 5 companies that are accumulating 60% of the S&P 500's growth this year. Goldman Sachs has not seen them slowing down. Microsoft, Nvidia, Amazon, I think Meta and Google are in there. So it's like, if they're not slowing down, then the banks, they have to reiterate their adjustments, and it's a tough decision to reiterate to the upside, but that's what they have to do if they don't see those earnings declining. And if those earnings don't decline, which it doesn't look like that's happening anytime soon, then, I mean, dude, imagine Nvidia at 150. Imagine it at 145. It's 3.34 trillion. I think it started the year at 1 trillion or something, 1.2 trillion, something crazy like that. It's just done phenomenal. And is it crazy that Nvidia goes to 4 trillion this year? Again, it would feel kind of crazy. Now, granted, I think the market's expecting 30 billion next quarter. The rumor is like they're going to put up 28 billion. Imagine they put up 30 billion in revenue. I mean, goodness, great. And their gross margins are at 78%. Those are up 11% year over year. So the margin, it's not like the profitability of the business is struggling either. It's just the demand is being pulled forward. And we're getting a lot of momentum for Nvidia. All right, we got 40 seconds until the market closes. Palantir 2580. Looks like we're going to end on a high green day for Palantir. I think we'll talk about covered calls and options. I was on the phone with Steve. I think a lot. I see Michael. I see you in the chat. I think if you have covered calls and you're underwater on them in Palantir, you can just roll them. Like it's not. I mean, I'll talk more about it, but it's. I don't think you need to be too scared if Palantir is ripping right now and your covered calls are closer. Your covered calls are going to be underwater. Like the eighth wonder of the world is rolling your options. And the market always gives you opportunities to get in and out of different positions without having to take a loss. In fact, many times getting a net credit for your roll. So we'll talk about covered calls, but I don't think anyone should be struggling right here. Given Palantir's historical price action, there's a lot of different strategies in my head to navigate the position and make sure you keep your shares. All right, 4 p.m. Tuesday, June 18th. Thank you all for being here. The stock market is now closed. All right. What a day. What a day. What a day. What a day. The market is now closed. Hope everyone had a good day. Let's get through some of these stocks. Then we'll get into a bunch of different topics. Palantir ends the day up 3.28%, 2584, market cap 57 billion. The PE is 203. Is that kind of expensive? Sure. Price of sales of 24.6. Is that kind of expensive? Maybe. But still, the market's willing to give it a premium. And so it is what it is. That's what you got. And obviously, I think if their growth increases in Q2, that PE will start to come down more as well. We'll talk more about Palantir, but there you go. Palantir up 3% of the day. AMD down 2%. Broadcom down about 1.4%. Nvidia up 3.5% after hours. Wow, 136.70 or 135.70 now after hours. Continuing to go up there. Someone made a good point in the chat. Cisco's PE was 150 when the bubble popped. Nvidia's PE is 55. So, I mean, there is a more egregious overvaluation that was happening with Cisco during the .com bubble. 548 on the S&P, up 0.25% of the day. Robinhood, I made some moves on Robinhood. We'll talk about that in a bit. Rocket Lab, nice 13% gain on the day. Again, that news about their Electron rocket with Japan, that sent the stock up 13%. So nice to see that. HIMS was up 2.53%. Tesla down a little bit, 1.38%. GameStop down 2%. Celsius got some love today, up 8%. So it looks like 57 seemed to be a little bit of the bottoming out for Celsius, and up 8% on the day with the rest of the market. Chewy hit $27 at 1.14% up on the day at 26. CrowdStrike down a little bit on the day. Netflix was up 685, all-time high or close to all-time high for Netflix, now up 1.46%. Meta below 500 on the day. PayPal also did struggle. PayPal struggled, 59.12, down 1.68%. I thought about selling my PayPal options and just taking the loss. For those that don't know, I think I put $7,000 in the position, and it would be like a $5,000 loss. No, $6,000 loss, and I would gain 1,000, or like 5,800. I gained 1,300. But at this point, if I'm already down so much, I'm like, let's just go down with the ship. Let's see what the hell happens in Q2, and maybe this thing pumps back up to 68-ish, 72-ish. We'll see what happens. But PayPal right here, 59.12. Good company, broken stock. It is what it is. It happens. And so that one's down 1% on the day. Nubank's down a little bit. Oh, SoFi did not have the best day either. SoFi continued to struggle, down 0.62% on the day at 642. Apple 214. Again, Apple was down 1% because of that Vision Pro news, but I don't think the Vision Pro news even matters for the stock. I think if they're going all in on AI, that's all the market cares about. And the Vision Pro stuff doesn't even matter anymore. And that's what you got. Not bad. Oh, SMCI. Yeah, look at that. 3.7%. SMCI, green day. 920. What about Micron? Micron, wow, 3% as well. 153. They have earnings next week. And we'll see what happens with Micron following Broadcom and Nvidia. Okay, let me play this clip by Goldman Sachs. This is a really good clip. I watched it while I was driving, or I listened to it while I was driving back in my car, because I was driving when I was coming back, because I was in the car because I had to come back from somewhere, and that somewhere is the gym, baby. 2 days in a row in the gym. 15 minutes today in the sauna didn't even feel like nothing, bro. I handled it like a champ. But this was a really good clip. I want you guys to listen to how they think about where the market's going. And then after this, we're going to talk about Robinhood, some moves I made today, and then rolling options on Palantir. Here we go.
Goldman's raising their year-end target to 5,600, a third hike here, one of the highest on the street. Chief U.S. equity strategist David Costin is here with more on that call and to talk about what's next for stocks. DK, it's great to have you back.
Nice to see you.
Why the move?
The move relates to 5 companies that is really driving the market, and it's really a story for this year. The market's up 15, 16%. 60% of that return comes from 5 companies, largely affected and influenced by AI. So there's 2 reasons, Carl. The first is the normal earnings pattern is that earnings get cut by around 8% over a 2-year horizon, kind of 4% one year, 4% the next year. That is your normal pattern. For 495 stocks, that has been the case in the last 12 months. Earnings are down, have been cut, earnings estimates have been cut by 5%. But for 5 companies, earnings estimates have been increased by 38%. So in aggregate, you've had really no degradation in the expectations, and the market prices expectations. So that's
meaning the bottom half of the S&P 500 companies, their earnings expectations went lower because they just haven't performed. But the top 5 have gone up 40%, 38%. So if it's a wash and there's actually a premium because the top 5 companies have grown so much, that's where you have to readjust your EPS estimates for the S&P.
Sort of the earnings side of it, that less sort of weakness than anticipated as a consequence of the 5 companies. The second would be valuation. And the way we approach the valuation is to think about the equal weighted stock, the typical company in the market, which is a way of valuing individual companies, each company weighted the same. Multiple there around 16 times. And our forecast is that will be modeled would suggest around 15 times the end of the year. It's a little bit lower, but the premium that the aggregate trades relative to the typical stock likely to rise. And that model leads us to a valuation of around 20.5 times. And the combination there of earnings and valuation leads us to 5,600.
Your bull case is 6,300?
If you look at some different scenarios, you could have the mega cap exceptionalism. If that was to continue, you'd have a maybe 45% premium that the aggregate index trades relative to the weighted index. Think about that. The equal weighted index, SPW is the ticker, and SPX, kind of think about those two, one versus the other. And that's how we think about it.
So their bull case is 6,300. Now, I think the important thing to get away from this is that I know a lot of people think, oh, Goldman, JP Morgan, they're big banks, whatever numbers they put out is nonsense. Again, when you're listening to that guy talk, I don't think that's nonsense. I know like people conventionally don't like the banks, but when they have to raise estimates this aggressively, and you'll hear in the next question, they don't like doing that because they want to be conservative for their clients. Because obviously, you know, they don't want to lose their clients' money and underpromise and or overpromise and underdeliver. But the earnings have been so good, and inflation coming down is such a tailwind that they have to do this, which is something I think everyone needs to pay attention to.
Did you hate having to write this note? I feel like you did. Raising for an equity strategist, having to raise their target because 5 stocks just keep outperforming. You didn't change your forecast on real yield. You didn't change your forecast on the rest of the earnings picture.
Sarah, it's an excellent question. Only 27% of mutual fund managers are beating their index this year. 27% of core managers, 37% of growth managers. It's been a very difficult time to be an investor and a strategist in terms of the tailwinds. It's been 5 companies that have really explained the story of the market. One of the things that's pretty interesting in terms of developments that are taking place is the IPO market. We've been talking about this for a while and expectations. We have an IPO barometer now above 100, indicating kind of the normal, how conducive a market is for IPOs. This year, we've had $18 billion of IPOs. That compares full year last year around $22 billion and $8 billion in 2022. So you've had a big increase. And I was recently in Northern California. We had 55 companies in Napa Valley to discuss. These are private companies with the expectation of going public in the next 18 months. And that's sort of one interesting aspect of where alpha is likely to be.
So you're excited about things that are other than just the big 5. I guess some people are questioning whether the concentration risk and outperformance is healthy for the overall market.
Well, healthy is sort of a pejorative term, but I would say it would be better if there was wider breadth in terms of the performance in the market. There's lots of opportunities in the market in terms of performance, and we talk about that every day. Some of the GLP-1 drugs. The real story that everyone's discussing, all the questions that come to us relate to AI. And we think about AI in a couple of phases. Nvidia, big winner, obviously. The infrastructure build-out companies, yes, some of the hyperscaler companies, some of the semiconductors clearly benefiting. ARM, TSMC, kind of other aspects of the infrastructure build-out. And there's been much more skepticism around the sort of enabler, the revenue companies that will the benefits of widespread adoption of AI. And the question, Carl, is about what is the return on investment of all those AI dollars. And that, I think, is a big question. It remains to be answered, but you'll start to see that in the next couple of quarters. If there's not some evidence that there's a return on this money, then I think a lot of investors will start to ask, is a real story there?
So that was a really good point he brings up at the end. He says, look, the market is pricing in this premium for AI companies if they can't put up the results in the subsequent quarters of AI actually making their businesses more productive, then the market's going to get really afraid because they're going to believe that this AI tailwind isn't a real thing. So far, what we've seen, even in simple examples like Klarna, AI is absolutely making a difference. And if that expands on a more global scale over the next, 18 months, we're going to see the market probably expand multiples on a variety of companies. So the point I got from that Goldman Sachs strategist was just that if these 5 companies are making up the majority of the S&P 500's return, and those 5 companies, yes, is there a concentration risk? 1,000%. I mean, all Nvidia, I think, accounts for 40% of the S&P's earnings per share growth year to date. That's insanity. But and it's a big but it's a but. If Nvidia is not slowing down, or forget even slowing down, if Nvidia, let's say Nvidia falls back to 115 or 120, which was still insane for the year. If Nvidia is not necessarily stopping and the demand is not going anywhere, then you can't just ignore reality. You can't just be like, oh, well, I don't like that Nvidia is, highly concentrated in the S&P and therefore I'm going to be bearish. You have to adjust. And I think that's what Goldman Sachs, Evercore, JP Morgan, Bank of America, they're all adjusting to the new reality that we live in. So the question is, are all these guys stupid? Are all of us stupid for thinking that for not feeling like it's obviously a bubble or obviously a top if 5 companies compose of the majority of the S&P 500's year-to-date returns? Or are we all looking at basic things that like basic numbers and realizing that if those numbers aren't going anywhere and the guidance from those companies shows that they're definitely not going anywhere, then we have to adjust our price targets and EPS estimates go up. You put a 20 to 22x, 25x multiple on EPS, you get closer to 6,000 on the S&P 500 with with the potential of rate cuts. We haven't even cut rates yet, bro. We have not even cut rates yet. And so, like, I just think there's a lot of tailwinds left to go in this market. Obviously, it's still a stock picker's market. I mean, if you pick PayPal, SoFi, or IWM, you've had a crappy year. So it is a stock picker's market, which is also good, right? There's another really important point. I know I keep saying this, but if you throw a dart at any stock and it goes up, we are probably in a bubble. That's not the case. You throw a dart at PayPal, your dart is like stuck there for a long time. You're not moving up, right? Same thing with IWM, SoFi, a variety of these companies, which is how it should be, right? Earnings should justify the broader growth of the entire sector. Okay, let's talk about some moves I made today. So first on Robinhood. Why is Robinhood down? Robinhood is down because Bitcoin is down. I think that's the only reason. On a a green hot day for the market, Robinhood tends to do well. Why? Because Robinhood is a bull proxy on the market. Market goes up, Robinhood goes up, more trading volumes, more deposits, more users sign up. Everything ends up being good for Robinhood. The reason why Robinhood struggled today, if not, I think it would have broken 24, is because Bitcoin went down about 3%. Robinhood right here, 22 after hours, but it was at 2186. That's where it ended. Bitcoin right here, 64,423. It tried to get above 65, and for a minute it got there, but unfortunately just cannot hold that momentum. I think what's going on with Bitcoin, and I'm not fully sure about this, I do think there's some manipulation happening, because if you look at CleanSpark, that thing is up 1.25% of the day, 1948. You look at Marathon, that thing is up 1.3%, $20.28 on the day. Historically, from my understanding, when the miners start going up and Bitcoin starts going down, which makes no sense. Why? Because the miners are in the business of mining Bitcoin. If Bitcoin's price goes down, the literal revenue and net income that these miners collect materially goes down, because the price of what they're mining every day goes down. So that divergence signals that Bitcoin is bottoming, and right now it's just being manipulated until it's going to be let loose. But once it's let loose, and the reason the miners are front running that is because they know it's going to be let loose, or at least the market thinks it's going to be let loose. That's when Bitcoin starts to go to the upside, and the miners are kind of signaling that. Otherwise, I have no idea why the miners are up when Bitcoin's down. That does not make sense. Like, it literally does not make sense. MicroStrategy as well, down 2.5% of the day. You would think it would get hit even more, but even that one stayed pretty calm on the day as Bitcoin continued to go down. So that's the reason why Robinhood is struggling today. Now, what did I do on Robinhood? I sold some puts. On Robinhood, $18, 18.5 for July. I think those premiums are decent. Also, I bought more calls on Robinhood. So I already have a position, the January 2025, $22, $25 call debit spread. I added 5 more to my position. So now I have a decent number of contracts in that position, and I added 5 more. This was the cheapest price I got in the past couple of weeks. So I was like, you know what? I'll average up a little bit. And I actually didn't even average up. It's like my average stayed the same. So didn't make a big purchase, but bought those. The spreads cost me $1.09. So spent a little bit over $500. And so that's the move that I made today. I believe the reason Robinhood's down is only because of Bitcoin. I don't think there's anything fundamental there. So as Bitcoin goes higher, I think Robinhood also goes higher as well. And we'll see what goes from there. So that's what's happening on Robinhood. And that's the moves I made today. Okay, so Palantir covered calls. Let's talk about Palantir covered calls. So I called Steve an hour ago, and we talked about Palantir covered calls. First of all, put in the chat if you have covered calls on Palantir. Put in the chat. Palantir ended at 25.78. I sell covered calls on Palantir. I sell puts on Palantir. I think when you know a stock really well, you can navigate the price action. It doesn't mean you're perfect at calling when it's going to go this way or that way, but you can navigate the price action. If you have $25.50 or $25 covered calls or $26 covered calls on Palantir, we have seen this story many times. Palantir runs from like 23. I mean, literally, we saw it in earnings, right? Palantir went from 23 to 25.3, and then it collapses 20% because the earnings just weren't that amazing. Well, I thought they were amazing, but they weren't like exceptional, right? That's why the market couldn't justify it. So we've seen the story many times. Palantir runs from 22.23 up to 25.26. 26 is massive resistance. And until 26 is established as support, which means we would have to jump up to like 27.5, which is the all-time high, at least, or 52-week high. And then we would have to fall back to 26 and kind of hang around there. 26 is going to be hard to overcome. Rolling those covered calls to $27, $28, even $26 on August 2nd, which I think is very reasonable because earnings happens in mid-August, I think is not the craziest move in the world. So let's say you have a $24 covered call. You collected some premium last week when it was 22. You didn't think Palantir would go above 22. Okay, you're underwater now because Palantir is 25.5 or 25.8, whatever it is. You can roll to 25 or to 27 by August 2nd, If you ask me, I think it's kind of hard for it to get to 27. Is it possible? 1000%. Is it probable, just given the nature of the valuation and what might happen if Nvidia takes a dip? Palantir is definitely taking a dip because I think Palantir ran with Nvidia today. No, so then you could say Palantir, all right, 27, it might not happen. Let's say Palantir gets to 27, gets to 20. Let's say Palantir gets to 30 by the time you sold that $27 covered call for August 2nd. The beautiful thing about Palantir, this is very important to understand if you're in the options market. Palantir is like crack for a lot of people. Same thing with SoFi, same thing with a lot of these other, same thing with Nvidia, even though Nvidia keeps performing. A lot of the druggies get into the market when they see things go up because the majority of the market starts buying when things go up, not when things go down. So people are willing to pay ridiculous premiums, specifically on Palantir, for calls when the thing starts running. Historically, Palantir has not justified the growth yet to just run all the way to 30, 40 bucks. It's not going to have an Nvidia-like move because at 21% year-over-year growth, the growth is just not there yet, right? And you have to be patient as a shareholder. And if you actually understand the company, you're not just some bozo thinking, oh, Palantir to the moon, Palantir is going to $700, then you actually know what's happening in the company. As a result, let's say Palantir goes to 30 and it's August 2nd, and you had even $27 covered calls after you rolled from 24. You can just roll that sucker again. Roll it to December for 35. And now, if you ask me Palantir to 35 by December, I would probably say that's not going to happen. If you there's $40 strikes for January 2025. If you said, hey, do you think that's going to happen 37, 40 bucks by January 2025? I'd say, you know what, $90 billion valuation. I think that's hard to justify. So no. On the days when it's the most green, you don't get scared that you have a Palantir covered call that's underwater. You get excited to roll it for a better premium. Because on days like this, let's say Palantir goes to 23 tomorrow, the premiums are gone. No one's going to be willing to pay that premium. But the days where Palantir goes up, the crackheads come out. And the crackheads are willing to buy these ridiculous call options at these ridiculous strikes that are short-term in nature because they think the thing is going to the moon. And it's not just with Palantir, it's with a variety of other stocks that are incredibly liquid and that have people that are very uneducated about the stock. This community, I would argue, is incredibly educated about Palantir. The majority of people don't fuck it. They just think it's an AI play and they see it going up and then boom, right? And that's just how it is, right? That's just the nature of the markets. On the days where Palantir runs, you roll your covered calls, you get a premium, and then you just wait and see. Worst case scenario, it keeps hitting your strike. You keep rolling out to a later date. Rolling is the eighth wonder of the world. The only time rolling doesn't work is when the stock falls so dramatically that you can't keep rolling out because there's no premium left to be given. But if the stock keeps staying within a relatively, $10 to $15 range, you just roll. And it's not that big of a deal. So I think for anyone who's super scared about their covered calls, I've evolved from that mentality as well, that instead of getting scared, I just realized, well, I'll just roll this. I know where Palantir should be or should not be. Some druggies willing to pay this much money because they think Palantir is going to $35 by November. Is it possible? Sure. And if it does happen, I'll roll it again. But probably they would have to do a lot of growth to justify that. And if that's not going to happen, I'll take that premium and I'll just let my shares wait. And if it does get there, I'll roll it out even later. So to me, I don't think it's that big of a deal when it falls and when it gets to that strike. And then if it does fall, you sell some cash secured puts and you collect premium on the downside. And so I really don't think it's that scary if your cover calls are underwater. I had $25 I had 25.50 covered calls. So my covered calls, obviously stocks at 25.80. I only sold 10 of them. I didn't sell, a ton of them. So in my opinion, I was just like, well, I can just roll this out to 27, in the next month I collected some premium. And like, if it gets to 27, I'll roll it out to 35. It's just not that big of a deal because if you understand the company, you understand where the price action goes. Now, if you think Palantir deserves to be $35, $40 in the next 3 months, then I'll sell you that covered call because I think I know the company well enough. And I think goodness gracious, I think a lot of the employees, Alex Karb, if you put a gun to his head, and do you think the stock should be $40? You'd probably say no, dude. Stock should not be worth $100 billion on $2 billion of revenue, trading at 50x price to sales. Like, we have to be reasonable here when we are bullish. And so from that perspective, if people are willing to pay, go ahead, let them pay, collect premiums, and keep moving forward. And that's it. Douglas says it's the reward you have for the covered call. You can keep rolling out and up on green days and in and down on bad days. Yeah, here's the other thing. Because you bought the shares and you're covered, as Douglas says in the chat, the reward you get is rolling out and up on green days, means you go to a different expiration and you roll to a higher strike and you get paid for it. And then on red days, you can either buy those contracts back for pennies on the dollar and set a new and write a new set of covered calls, or you just roll in and down, which means you roll to a closer expiration and down the strike, and you still are able to collect premium or give back a little bit of the premium that you got from the market and keep your shares. So when you have a lot of shares, and this is the biggest thing I learned from TJ, you have to know how to make those shares valuable. And one of the ways to make them valuable is selling covered calls to the people that are willing to pay these ridiculous premiums because they think Palantir is going to go to the moon tomorrow. And look, if Palantir does go to the moon tomorrow, again, worst case scenario, you're underwater on the new set of covered calls. You roll them out. If Palantir goes to 40, what do you think is going to happen? There's going to be the $50 option chains open up, the $60 option chains open up, and a bunch of crackheads are like, oh, Palantir's at 40, it deserves to be 50. And they're going to pay you premium for $50 call on Palantir. And unless you think Palantir keeps going from $25 to 50 to 60 to 70, you can, for eternity, roll those, given the stock doesn't absolutely collapse, and keep collecting premium and eventually roll out of the options or roll out of the contracts because you get to keep your shares. Now, the one stock that this has not worked on this year is Nvidia. I have a friend who sold some covered calls on Nvidia at 130, and she had to roll out of those for 140 for I think like 135, and then obviously today 135. She had to roll them into 145 for next week, and so she's been collecting, like, she made $12 last week after she had to give back all of her premium to the market. So she would have made like 1,700, but Nvidia decided to keep going higher. And so when you've got a stock like Nvidia that just goes on a tear, yes, the covered calls will keep going underwater. I mean, you can keep rolling them, but you're going to get hit. But with Palantir, it's not that it can't go on a tear. It's just that already year to date, now Palantir is up 50%. And you got to ask yourself, does Palantir have the type of growth that Nvidia has to justify keep going up every single day? Does Palantir have the brand recognition Nvidia has? Yeah, 52% to keep going up every single day. Probably not. Also, there's 2 billion shares outstanding, so there's got to be tons of volume every single day to keep this thing going. See, these are things you know if you're like actually covering the company. But if you're just some degen buying calls because the thing's going up, you don't know that. And that's where someone like me or someone like you in the chat can collect the premium and keep going from there. Michael Schaefer, I guess the question for us, when does Palantir have its Nvidia run? I think the growth has to get closer to 30%. Again, we have to be reasonable here, right? And I think one of the reasons I like my coverage of Palantir, besides the fact that it's my content, is that I think I've always tried to be reasonable and objective here. And I get excited when it runs up. I get super excited because it's fun, but I also try to be objective. Like Palantir going to $50, being worth 100 billion, trading at 50 times price of sales. That's just not real. If that happened, I think Karp, Sham, and Thiel would start selling shares like madmen. And I couldn't blame them if they start doing that, because the company just doesn't deserve that valuation. And also, you don't want that. It becomes a meme. Like, do you think GameStop deserves to be worth 15 billion right now? No. Do you think Palantir deserves to be worth 150 billion? Probably not. Like, if you just look at basic investing principles on how a company should trade. So from that perspective, growth has to get to 30%. Adjusted operating margins have to get closer to 40%. They're at 36. I think we get to 40%. And if growth closes up to closer to 30%, then the markets, and even if growth is below 30%, the market will give Palantir a premium no matter what, because Palantir has a cool factor associated with it, and cool companies get cool premiums. However, if that growth is stuck at 20% or 21%, the market's not going to give that premium. There's just no way they can justify it. You've got to have the growth. And so when that growth comes, I do think Palantir will be able to run. The short interest on Palantir is super low. That's correct. And that's awesome for Palantir. The one thing that is also super low, unfortunately, is the institutional holders on Palantir. That has not caught up to companies like Snowflake that have 60%. Now, granted, Snowflake is starting to seem like it's maybe not the best AI play in the world. So I think some of those institutional holders maybe come over to Palantir. But right now, Palantir at 41% institutional holdings, it's just not enough to justify a ton of momentum as well, especially not enough to get into the S&P 500 given the low ownership. So we're going to have to see. We're going to have to see how that plays out. Benny says 2 Palantir bulls, Amit and Tom Nash. Amit says Palantir isn't going to have a run like Nvidia. Tom Nash says Palantir is going to have a run like Nvidia. Look, Tom could be right about Palantir having a run like Nvidia. I just don't think it's happening right now. And I think that's maybe a little bit of the difference between me and Tom. I don't know if Tom said it's going to happen this summer. I don't think he would say it's happening this summer, but I don't think it's happening this summer. A run to Nvidia, what, up 175% year to date? That means Palantir has to go up another 120%. So from 25, it has to get closer to 50. Yeah, I would take the under on that. I just don't think that's going to happen. But will an Nvidia run happen in the future? I personally believe yes, if there's the growth to justify it. I also think a run like Salesforce, which has done phenomenal since IPO, that is also very possible. Salesforce IPO'd at $2. It's at $231 over 17 years. And at one point, it got to $318. If you think Palantir has more potential than Salesforce and you got in at $10 a DPO, maybe your average is like $20 or whatever. If you're in this thing for the next 10 years, which you guys know, this is the one stock that I really am long for, at least the next decade of my life. If not, the shares will be given to my kids. Then, I'm in it for the long haul, and we'll see how it plays out. And maybe you don't need an Nvidia type of run. Maybe you just need this thing to take its time to get there and grow in a mature way. And that's it. Don't think we'll see a blowout in Q2 with the $158 million upfront with the Maven contract. Remember that $158 million upfront, it's not in Q2. It's going to be amortized over the next probably like 3 or 4 quarters. So that $158 million is not going to be a blowout on top. If we got that $158 million, that means we would put up revenue. I don't even see. This is what you have to understand about Palantir. They're expecting to do $650 million in revenue. Let's say the Maven contract gave them the option in their whatever creative accounting they do to recognize $158 million this quarter. 158 plus 650, that would be what, 758 or something? No, 800. Yeah, 650 plus 150, call it 800 million. Do you think Palantir wants to put up $800 million in Q2 if they can't recognize above that in Q3? Like, this is where we have to be logical here. Like, no, obviously, like the company itself doesn't want to say, hey, investors, we made 800 million in Q2, and then Q3 they drip down to 670, because that's worse. The perception is, oh, the business is declining. In reality, they would want to amortize that 158 million over time so that it helps them beat their estimates, but it doesn't so ridiculously beat their estimates that now investors are like, well, you put up 800 million in Q2, now you got to put up 840 million in Q3, because there's no way Palantir can justify that. So I think they're being very conservative with their accounting, but they're making sure they beat their numbers. Palantir has not missed numbers in the past 6 quarters on EPS or revenue. They haven't missed not once. Now in Q3 2023, they beat by 1 million. But the point is, they did not beat or they not miss because they want to make sure that Wall Street is with them on expectations, and that's what they need to continue to do. Michael says we'll probably see another run up to Palantir earnings hitting 28, 29, then we drop back to 25 after. Yeah, and I think that's reasonable. This time, this earnings, we went to 25, we dropped to 20. 20 was solid support. And you guys know I bought a lot at 20. My sister bought a lot at 20. I bought my dad a lot at 20. At 21, I was being very public saying, guys, I am buying at 21. I don't think we're going to get below 20. If the next earnings, we go up to 29 and we fall back to 25 and 25 becomes support, then great. Maybe we're done with below 25 and we're in the new 25 era, right? Maybe we get to the next leg up for Palantir, but that's how it should be. Running to $50 tomorrow to me is just stupid. And it's like, it's not going to make a lot of sense for the broader life cycle of Palantir as well. Greg says, new to your channel, I heard a theory that because of the halving that miners are struggling and selling their Bitcoin. What about the theory that miners are up due to selling Bitcoin revenue and that is why Bitcoin is down? That's an interesting theory. So one argument you're making is that miners are selling their Bitcoin. That's why they're recognizing revenue, and that's why Bitcoin is down. It's a hell of a theory. It's something I want to look into. The miners shouldn't be up though if they're selling their Bitcoin, because the street won't know about it until Q2, right? Until earnings come out. So the street, if CleanSpark sold like 3,000 Bitcoin and that helps their numbers, the street won't know about it for the next like 90 days or 40 days or whatever. But if the street thinks that's what they're doing, then maybe that's why the street's buying CleanSpark. But then again, why would you buy a Bitcoin miner just because they're selling their Bitcoin? Like, if they're selling their Bitcoin, that's obviously bearish. That means Bitcoin's at a top. And CleanSpark, by the way, called the top back in November 2021 exceptionally well. They sold at 69,000. So if they are selling, that means at the top. That means Bitcoin's going to get ready to collapse, which means you don't want to own miners. So I think the logical conclusion to that thesis means that you wouldn't buy the miners, or the street wouldn't buy the miners at that point either. I think that would be hard to justify. Douglas says, nah, bro, miners know the price is going to blow up on supply shock. They are going to hodl. Yeah, I think so as well. I think so. I don't think the street would buy miners if they're selling Bitcoin off the increased revenue of the Bitcoin, because if they're selling Bitcoin, that means Bitcoin's going to go down. And so why would you want to own the miners if Bitcoin's continuing to go down? Let's listen to some analysis around AI as well. And then we'll keep going from there. And a couple of things I want to talk about. Here we go.
Got lots to talk about, and let's begin just with your view on the markets. We've been around record highs. Where do we go from here, do you think?
So the S&P has been a phenomenal index. The returns have been driven by a handful of companies that have been able to leverage growth at scale like we've never seen before. And for a minute, let's celebrate America. These are all American companies leveraging the American capital markets, and it's a wonderful thing.
Amen to that. Oh, by the way, guys, real quick breaking news. Twitter, or X, they have now passed 600 million users. Elon just confirmed 600 million people now use X.
But, the performance, if I came on your show in the beginning of 2023, and if you told me then that these stocks would have performed the way they have, I would have been skeptical, like most have been. So Can it continue? I don't know. It's a very powerful trend. I think there's a difference between what's happening with a handful of companies that make up a big portion of the S&P 500 and what's happening with the other 490 odd businesses. And with the powerful AI trend, it'll work until it doesn't work. There's been a lot of positive circularity when the hyperscalers say they're investing more money in AI and their stocks work. It's more money that can go to Nvidia and drive this amazing trend. It'll last longer than we think it will. And I'm not going to make a call on that. Where we're going to spend our time focused is on the other 490 stocks and trying to find, high quality businesses going through change, trading at reasonable values.
You still are, though, investing in those big names. I mean, you hold many of them, correct? Right? You boosted your stake in Alphabet recently. Is that right?
So our view is we should run a balanced portfolio. There's no way we're going to have 20 ideas that are better than all of the large cap names. And if there's an opportunity to own the best businesses at a reasonable value, we should do that. A year ago, if I came on your show, I would have had probably 25% of my portfolio in names like Microsoft, Google, Amazon, Uber, Salesforce. Today, I probably have 12.5% of my portfolio in those names. We're always, as sort of value-driven investors, probably going to sell a little bit early. But I think it's a very hard thing for an investor to have a whole portfolio with no bets on these amazing large companies that are allocating capital in such attractive ways, spending on R&D and leveraging technology.
Again, same thing that Goldman Sachs said. It's hard to not bet against these companies or to bet against these companies. Same thing that Goldman Sachs, same thing that Evercore said, same thing that JP Morgan said over the past few days. It's hard to bet against, let's just call it the Mag 5 or whatever, right? Like those companies, they're putting up the numbers and you can't justify a $4,200 price target on the S&P if those numbers continue to grow. And so it seems like everyone's kind of coming to that conclusion as well. Someone asked about Coinbase. Do I think Coinbase is a long-term play? I think the only problem with holding Coinbase right now is that it's up 7x since it bottomed at $30. Coinbase has been stuck between 230 and 260 for like 2 months now, and that's because Bitcoin hasn't gone anywhere. When Bitcoin runs, Coinbase will run too, right? It's going to happen, but it's been relatively dormant because it's had its run since 30. So I think if you want exposure to Coinbase, you got to believe in Bitcoin, and yeah, you have to really hold it for the long term. But if Bitcoin gaps up to 80, 90K, Coinbase will do great. Unfortunately, Coinbase is just, a lot of people miss Coinbase, including myself, at $30. It was a no-brainer at 30 in hindsight, and it's up 7x. And so it's hard to squeeze more juice out of that until Bitcoin runs. Cool. So that's what we got on Coinbase and Bitcoin. Walgreens is up 6% today. Walgreens is up 6%. Let me give you guys the 52-week highs of today. Let me see the stocks that hit their 52-week highs today. Okay, Nvidia obviously hit its 52-week high. TSM hit a 52-week high. Eli Lilly, wow, Eli Lilly's almost 900. Oh my god. Eli Lilly, Ozempic is a catalyst, and then their new Alzheimer's potential cure is a catalyst. Walmart hit a 52-week high, Broadcom 52-week high, Oracle 52-week high, Costco, Netflix, Qualcomm, ARM. Goodness gracious, ARM is 177. This is one I got dead wrong. I said ARM was overvalued at 100. And I still think it's fucking overvalued at 170. I think it's stupid. There's the PE is 600 on ARM. But again, this is the stuff that makes me uncomfortable in this. You want to know what makes me uncomfortable? Seeing stuff like ARM. Because although I know how vital it is, and I get it, their growth is not there either. It's 18%. It's 3.2 billion in guys, the market cap is 182 billion. Let me make sure so I'm not getting this wrong. ARM's revenue is 3.2. I don't know, dude. That's a tough one to swallow. But again, it's getting the benefit of Nvidia. Revenue yearly. Yeah, so far, 4 billion. Sorry, I'm wrong. 4 billion in revenue, 4.1 billion. It's 4 billion in revenue, $182 billion market cap. Dude. And like you could say, Nvidia's doing 79 billion in revenue, $3 trillion market cap, but Nvidia has the growth. ARM doesn't have the growth. Where's the fucking growth? Hold on, let me go to the actual growth. Where's the growth on ARM? Let me see. ARM's revenue growth. ARM's revenue growth, 3-year revenue growth is 9%. Yeah, dude, the growth is not there, dude. Like Q4 they did 1 billion in revenue, Q1 they did 1.1 billion. This is not an Nvidia type of story. So these are when it's a little bit tough to kind of to justify some of that stuff. Thomas says you're not wrong, it's just a short term, anything can happen. Yeah, which is why buying puts on ARM or on fucking SMH, which has done amazing as well. Look at SMH 276 for the year. We were talking about that in the beginning of the year. I didn't buy any, but we were talking about that. SMH as an ETF now is up 63%. Buying puts on a lot of these names outside of SMCI when it was 1200 has not worked out that much. It's not worked out. MC Allen, thank you for becoming a channel member. Appreciate you, MC Allen. Thank you for becoming a channel member on the channel. ARM 182 billion. Yep, 182 billion on ARM. It'll be the future income from their chip designs yet to be used. Yeah, look, that's the narrative. It's just insane that the market's willing to continuously give this valuation to it. And again, if it's following Nvidia, then it's following Nvidia. X has passed 600 million users. So I said that really quickly while we were watching that video, but that is a big piece of news. Chipotle also had a good day. Chipotle today. Oh, I just typed in SM. Wow, look at this, guys. I just typed in SMG. I was supposed to type in CMG. Apparently, this is a company, Scott's Miracle Grow. Is that the toilet paper? Is that a real thing? Is that the toilet paper? Hold on. Scott's Miracle. That's the toilet paper, right? That's the toilet paper. Don't tell me I'm wrong on this. Oh, no. No, never mind. That's not the toilet paper. Wait, is that the toilet paper? Yeah, that is the toilet paper, right? That's the fucking toilet paper. Wait, no, it's not. You guys know what I'm talking about, right, Scott's? It's fertilizer. Dude, I thought it was... I was about to buy some fucking toilet paper stock, bro. You know what? I use that every day. That's not, I mean, shit. SMG, Scott's Miracle Grow. Okay, fertilizer. Well, fertilizer is flat for the year. It's up 7% in the past 6 months. So if you use fertilizer. Speaking of fertilizer, I went to Home Depot the other day and I got my mom mulch for the garden. Chipotle's up 1% on the day. Year to date, 52%. Mulch is cheap, dude. Mulch cost me like $3 and I got 3 of them. So it cost me like $10 for a lot of mulch. I didn't know mulch was that cheap. But apparently mulch is cheap. This is what mulch is for those that haven't seen mulch. Mulch is like, it's just this like black stuff you put into the garden. I don't even know what the fuck it is, to be honest. She was just like, I need mulch. I was like, okay. I asked the pretty lady at the Home Depot cash register, I was like, where's the mulch? And she said, over there. I was like, all right, I'll buy some mulch. It's fertilizer that probably started out as poop, so you were close in some way, Amit. There we go. You didn't know people eat lamb. Yeah, if you were there on the market open today, I did not know that people ate lamb. I was like, guys, do people eat lamb? And then someone was like, Amit, there's something called lamb chops. And I was like, holy shit. You are right. There are things called lamb chops. Okay, let's watch another clip in the context of semis, because I think that is important to get a better understanding of why the semis are continuing to go higher. And then we'll keep going from up, and then we'll keep going. Who just sent a super chat? Oh, Bike Pimp, thank you for the $20 super chat, or €20 super chat. 2x Palantir position today. Here's your share, Amit. Keep up the great work. Really appreciate your efforts. I will buy my share of Palantir stock with that €20. Thank you so much, Bike Pimp. Really appreciate it. Thank you. Okay, let's take a look at this.
Target to 155 from 125. Don't forget, they just had the 10-for-1 split. So we watched that, and other chips are ripping today too. It's not just the Nvidias of the world. Christina Partsenevelos is here at Post 9 to tell us all about that. What should we watch for today?
Well, for Nvidia, Rosenblatt also increased their price target to $200, and it actually plays into Josh's comments about networking for Wells Fargo, because they're commenting on Nvidia's Spectrum X, which is the networking. So when you buy all these GPUs, you need something to connect them, and that's where Nvidia can also compete. But that means it would infringe on Broadcom space, Arista space, Cisco space, HPE space. So something to consider too when you're talking about Nvidia. For AMD, you mentioned AI PC. Today, though, the stock is down. There is a report of a hacker that got product information as well as employee information. I've reached out to AMD for just some comment to confirm that. Nonetheless, the stock is reacting, and the stock is really, only up, less than 5% year to date. So really underperforming a lot of these AI plays. Speaking of AI, PC, and all that, Qualcomm is a name that comes to mind. Yesterday, there was an analyst, Ming Chi Kuo, I should say. He's really well known in the chip space as well as the Apple space. He tweeted that Qualcomm would be the sole supplier of a system on the chip for Samsung. Mm-hmm. And because of that, you saw the stock just go up. As well, he also said that Qualcomm was increasing its prices for that particular
by
chip.
A lot.
Up to what?
Up 30%.
Exactly. So that really helps margins, especially if Qualcomm goes ahead and decreases the price of its AI PC chip from Microsoft. So I think margins are a big story for a lot of these AI plays in the next little while, especially if TSMC. I know I'm throwing a lot at the audience right now, but TSMC is reported to increase prices for their 3-nanometer processes, and that will eat into Apple, Nvidia, the list goes on.
Taiwan Semi new record high, Qualcomm new record high.
We got some breaking news, folks. Nvidia just bought a company, Shoreline IO. They just spent $100 million. This broke like 30 minutes ago. I'm just seeing it. Shoreline IO, $100 million. Why did they buy this? Shoreline for GPUs. Max out your GPU utilization. Automations and proactive break fix workflows to improve throughput and reduce latency for one GPU or thousands. Okay, so apparently this company does something important for GPUs, and Nvidia just bought them for basically a couple pennies for $100 million. And there you go. Nvidia, 100 million is chump change. Yeah, dude, 100 million. They're probably getting a nice buyout, and they were like, well, Nvidia's buying us, then that's like, why would we say no? Especially if there's probably no other company that can afford to pay that much money for something like this. It looks like it's an optimization platform for GPUs, and we're going to see a lot of smaller companies start that will end up becoming very, very big companies, even if they don't become public companies, because of the servicing and IT infrastructure necessary to make sure GPUs are effective within a certain enterprise. And so I don't know what Shoreline.io necessarily does, but it seems like they automate the optimization of GPUs, and Nvidia just swallowed them up for $100 million. Not bad. Admit my heart skipped a beat when I thought you were going to say Nvidia bought SoundHound. Dude, remember when we all thought SoundHound was interesting? Like, remember when it ran to $10 and we're like, let's see. And then we listened to the earnings call and oh God, the earnings were so bad. The dude was just like saying nothing about like, dude, if I was SoundHound fucking CEO and Nvidia just invested in me and everyone now knows who I am, and he was building a company for 20 years. The company's worth $1 billion. Like, how many people say they built $1 billion company, right? So it's something to be proud of. But in the public markets, people wanted to know, like, can SoundHound become like the next AI thing? And we just didn't get the AI vibe from the CEO that he needed to give. It was just a boring call. But this thing ran to $10. But again, I don't think this is a bubble market, which is why it corrected. When it ran to $10, the market realized this thing is not worth $10, and it came all the way back down to $4. Still up 3x if you bought it like 120. And it makes sense that it corrected a little bit. Palantir's coming back down. Where's Palantir? Here's the other thing about selling covered calls on Palantir, okay? Palantir 2578. If you sold a covered call today and you sold the crack to the crackheads and they were willing to say, oh, Palantir's going to be $30 by July, right? And they bought that call and you sold it to them. As soon as Palantir falls, you get to buy that call back at a cheaper price, right? For pennies on the dollar, or you just get to chill, collect all that premium, and your shares get to continue to be your shares. So on days that are green, it does make sense to sell covered calls because you get so much advantage of the premium. The question just becomes, will the stock keep running to that strike? And again, if it does, you roll up and out and you keep going. If it doesn't, well, then you took advantage of that moment. Now, there will be a moment in time where Palantir keeps running and running and running, and you can't do that anymore. At 21% growth, that's just not its time yet. And that's okay. It's only 4 years since going public. Nvidia if you look at Nvidia stock, sometimes people got to zoom out and see Nvidia stock. Nvidia was dormant for a very long time before it had this acceleration. And so I'm not saying Palantir is going to be at that level forever, but Nvidia was obviously doing something a little harder. But look at this thing. Went public at 0.04 cents. By 2017, it was up $3. Look, that's not a horrible return if you held for those 18 years, right? Just given how low you got in. But like, if you bought in fucking 2015 at 50 cents, by 2018, yeah, it's at $5. Not a horrible return, but it's not like monumental. This is when it goes crazy. And so the idea that Palantir doesn't go to $100 tomorrow, like historically, companies don't do that. They have a moment where they have an inflection point and then everything changes. I think this will one day happen for Palantir. I don't know if they're at that level yet, given they've got to continue the growth, right? When that happens, I think they will have the ability to do that. Is the market open on Friday? Yeah, the market's open the entire week except tomorrow, guys. Tomorrow's the only day the market's not open. I'll still do a stream. I'll find some guests and we'll talk about something. Not in the morning, but probably like a lunch with a mid type of stream. And we'll talk about something. But probably no market open or market close tomorrow either. Jonathan says, as a gamer, I should have known Nvidia would be this strong. Yeah, I mean, I heard of Nvidia's name even when I was in college. Dude, when I was in college, I should have been investing in stocks, dude. I was like starting little small businesses and stuff. And like I gained a lot of experience. That's great. But like I was starting Shopify e-commerce stores when I should have been buying Shopify stock. And I just wish I had been exposed to the markets even earlier. Because if I was exposed to that, because when I get into something, I get obsessed with it, right? Whether I'm not or I'm successful or not is we will find out. But I do get obsessed when I'm in the process. And so I got obsessed with like online business and trying little things. If I just got into the stock market and got obsessed with it and started following CNBC, like I was watching fucking ESPN every day when I was in lunch in college, I should have been watching CNBC. Not because CNBC is amazing, but because it would have helped me learn how I think about stocks. This is the one regret I have. During college, I was more obsessed with sports and like watching these pointless debate shows about sports. Whereas, you know, sometimes it's pointless to watch people argue about stocks, but at least you learn something from it. Whereas sports, like arguing if LeBron or Michael Jordan's better, like that's just, there's no point to that, you know? And so, yeah, I wish I started a little bit earlier, but if I did, I probably would have bought Shopify. I probably would have bought Nvidia. I probably would have bought Apple just on the sheer fact of like, oh, I have an iPhone, right? I would have been just like naive enough to just do that. And I don't know if I would have held, because if I see the stock go up, I probably would have sold. So I don't trust myself for holding, but I would have made a lot more mistakes quicker, I think. Crypto markets are open tomorrow. Yeah, but crypto doesn't go up. It doesn't pump. So what's like if it's not pumping, then what are we going to cover, man? Bitcoin right here, 64,654. Okay, one thing you guys are saying in the chat about this whole lamb conversation, I just realized how stupid of a question I said. Does anyone eat lamb? Dude, the amount of times I've had lamb over rice in New York City. I'm going to New York on Friday. Probably going to get it again. The amount of times I've had a gyro, or I went to like the halal food carts and I had lamb over rice, and I had the audacity. It's probably have to be at least a couple hundred times throughout my life. Like, because I live close to New York, right? So it's very accessible. I had the audacity to ask, do people eat lamb? I cannot believe I asked that question. Like, I literally cannot believe I asked that question. I've had so much lamb in my life. I don't know. You got to be trolling. Dude, no, I'm not trolling, dude. I don't, in the moment, I was like, lamb? Who would eat a lamb? And I did it because like I didn't realize, fuck me, I've been eating lamb for a long time. I assumed you must eat gyro. Yeah, I've eaten it so many times. So that's so crazy that I asked that question. I legit said, who eats lamb? Because I looked at the lamb on Google Images and I was like, who would eat this? Look in the mirror, buddy. Seems like you know some people that are eating it. Okay, let's get a little bit of an update as well on Apple AI and what's going on with Apple AI. Again, if you missed it today, Vision Pro is done. Kaput. They're not doing it anymore. They're making a cheaper version, not the Vision Pro 2. So let's get a little update on what they plan to do with AI.
For Apple to outsource it to a third party, do you think, Dan?
Good morning, Joe. I do think in this case, it probably makes more sense to work with partners to drive more options for their customers. If we look at the company, the announcements around...
There's no way I said gyro wrong. There's no way. Is it gyro or gyro? It's gyro, bro. Okay, I'm about to look this up, but we'll keep watching this. There's no way I'm saying that wrong. There's just no, there's no way.
Around Apple Intelligence, really evolving the user experience to the next level with this continued integration of hardware, software, and services. I think the story sets up well as we look into the latter part of this year and 2025 with Apple Intelligence contributing to a richer user experience with a better Siri, advancements in Genmojis, writing, and so a whole host of other things I think will drive continued growth of the install base, which sets up for revenue growth as we look ahead. So I continue to like the name.
So Dan,
Okay, so he didn't say anything that crazy, but same thing. User experience will be better with Siri. And again, if Apple's going to bring AI to billions of consumers, I think probably does deserve a bit of a premium. There's no way I'm saying it wrong, bro. There's no way I'm saying it wrong. You're saying it's euro. People say gyro as euro. What? Like the currency? Euro? Euro? There's no fucking way, dude. It's been gyro for the majority of my life. It's gyro. I'm on Reddit right now. Someone says, oh shit, they said it's euro. Oh fuck. Oh my goodness, dude. There's no way, dude. I've been calling it a gyro forever. It's euro? It's a euro? What the fuck is a euro, bro? Euro? I thought it's a gyro. I like literally, dude, for 26 years, I've been calling it a gyro. I'm on Reddit right now. They're also saying it's a euro. I mean, they're probably right because it's Greek, right? So it's like, that's how it should be said. Gyro. There's no way it's a gyro, bro. There's no way, bro. Fuck that shit. I cannot believe I was the 7th best debater in the United States of America. Look at this light, bro. This light is making me glow right now. I was the 3rd best public speaker in all of Europe in 2015. Look it up. All of Europe, they picked me as the 3rd best. And I can't say these fucking words. Like these just, I couldn't say wool this morning. It was wool or whatever. I did not know it was gyro. I want to see if there's a YouTube video on this gyro. How do you say gyro? This is incredible. Okay, I found a Greek video. Let's see what they say.
We are looking at how to pronounce the name of this dish from Greece originally, from Greek cuisine, made from meat cooked on a vertical rotisserie, a little bit like shawarma and tacos al pastor, quiche doner kebab. So how do you go about pronouncing the name of this dish with the typical Greek pronunciation? Yi, the G is not pronounced like a G in Greek.
Oh my God.
Simply say yi and then ro. You do want to roll your R rather strongly. Yiro. Strongly. Yiro.
All right, you guys were right. You guys are fucking right. This is tough, dude. It's really tough to live my life, bro. It's really tough every fucking day. Yiro. Dude, there's no way I'm pulling up to a halal guys. I'm like, let me get a gyro. I'm gonna say, let me get a gyro. Like that's like, there's just no way I'm gonna remember to say gyro. Like I've never said that in my fucking life, bro. Look at this. Jose's entering when I realize I can't speak. Dude, Jose, did you ever call it a gyro or a gyro? It's a fucking gyro. It's a gyro, or at least that's what it sounds like it should be. Gyro. Sounds like you're at a fucking Houston rodeo. Yeehaw, gyro. Like. Goodness gracious, bro. At least I can roll my tongue okay. I don't know if I'm going to stop saying gyro, bro. It's going to be hard. It's going to be our Bitcoin right here, 64,800. Gyro. I can't believe I got that. Dude, I asked, do people eat lamb today after eating lamb my whole life? And then I couldn't say gyro correctly. Incredible. S&P 548.49. We are 2 points away from Tom Lee's thesis, by the way, at 550. 2 points away. We get to 2 points away. Be 550. Okay, at least Jose is being honest. He said same as you, but I knew it was wrong. See, that's the problem. If you can admit and be humble, no one has a problem. I'm over here saying gyro and plethora like I'm the smartest guy on the planet. That's the problem. That's why I think people have an issue when I say the word wrong. Because it's not like I acknowledge that I'm wrong. I'm saying it with all the confidence in the world that I'm right. And people are like, just no, motherfucker, you're wrong. And I'm like, no, you're wrong. And that's when people get upset because they're like, no, you're actually wrong. And then I have to hear this fucking guy on YouTube say, gyro. And I'm like, oh, I guess I am wrong. Amit, how do you say jalapeno? Dude, I'm not doing this anymore. No way. It's jalapeno. It's don't tell me that one's wrong. Fucking my whole life is a lie. This one's jalapeno. I think, right? Jalapeno. It's a jalapeno. It's normal jalapeno. It's not that crazy. Jalapeno. I hope I'm not saying that wrong. I'm not going through this again if I'm saying that wrong. Okay. A couple other things I want to show before we get out of here. Oh, yeah, here. So I want to show this thing. I want to show a chart right here. I want to show a chart. I want to show. Did I say jalapeno wrong? Please don't tell me I said jalapeno wrong. If I said jalapeno wrong, I'm gonna like find a bridge or something. Okay, so I want to pull this up. This is a chart by Ryan Dietrich. Another good chart right here. Again, good research he's been showing right here. A 20% yearly gain suggests more green, but don't expect a bigger year than 2023. So this is a chart of 20% yearly gains for the S&P 500 and what happened next. So in 2023, we got a 24.2% gain. So we got a higher than 20% gain. Okay. So that's good. Now the next year on average, you have a 10% gain. The median is a 12% gain, but you are higher 80% of the time. Currently, the S&P 500 is up 16% in 2024. So the odds that we go up 20% historically are low, which means ending out the year at 6,000, which would be up 20%. That is low. But it is possible. On average, we end the year at 12%, which means we end the year pretty much where we are right now, if not a little bit lower at 530 on the S&P. Now, granted, this year might be an anomaly given how Nvidia's earnings have gone, Broadcom, Microsoft, et cetera, and these numbers might pump us a lot higher. I think that's probably, what could happen just given the earnings growth. But that is one of these charts here suggesting that it will be green, but might not be as green as everyone thinks that it's going to be green. So that's another chart I want to show you guys from Ryan Dietrich and some of the research they're coming out with. Here's another really good chart right here on productivity. So this goes back to the AI play. So look at this chart right here. US, Eurozone, and the UK. Productivity has risen much faster in the US than Europe. So as you can see right here, from January 2006, US, Eurozone, and UK kind of all started around this 100 level. United States is closing in on 140, and the UK and Eurozone are just above 110. So in the past 24 minus 6 is what? For 18 years, the US has outperformed dramatically in the context of productivity. And one of the reasons for that is because the United States has all the tech companies. In the United States, you're allowed to fire people, right? You're allowed to have there's not as many regulations on, Zuck got rid of 20,000 people as soon as he saw they weren't being productive. And in the United States, you have all the innovation. So the reason I'm showing this is because it's bullish for the tech companies that are promising you will have more productivity via AI. If this thing gets closer to 160, 180 in terms of the amount of output per hour of productivity per employee, you are going to see earnings growth out the wazoo. And I think that's what the bulls are betting on as well, as one of the promises from AI. And so that's going to be very important as well. Any other charts I was going to show? Oh, here's one thing I have to show. Oh, yeah. So Williams, one of the Fed presidents, here's 3 statements that he made today. Number 1, he said the U.S. economy and labor markets are strong. He said inflation is coming back to Fed's 2% target. That's really good. And then he said expect inflation to keep coming down later this year. Now, he did also say don't overreact to good inflation data. But these 3 sentences by one of the Fed's presidents, very good to hear. It seems like the Fed is at least starting to get on the side of, all right, inflation's coming down. This is what we want to see. And eventually we will cut rates. And that's it. Did I actually say jalapeno wrong? Jalapeno? Jalapeno? I'm going to look this up now. Now you guys are making me insecure. How do you say jalapeno? How do you say, I'm trying to talk about productivity and you guys are fucking talking about fucking jalapenos in the chat. Dude, this channel, it's the same channel. They have all the fucking words. I got to subscribe to this channel. I'm subscribing right now. This guy's the productivity dude, or not the productivity, the pronunciation dude on YouTube. Okay, here we go.
With a typical Mexican pronunciation, or let's say in Spanish or in Mexican, jalapeno.
Oh my God. Oh my fucking goodness. Oh my gosh.
Jalapeno, chili pepper. Jalapeno.
I hate everything, dude. I hate everything.
Jalapeno, chili pepper. Jalapeno.
So he's stressing the N. I said jalapeno. It's more of a accent on the N. Jalapeno, where I said jalapeno. Whatever, bro. Whatever. This is just stupid at this point. How do you say Chipotle? Well, Chipotle is Chipotle, obviously. No, I'm just kidding. But I heard someone say Chipotle one day, and I started laughing. Chipotle. Okay, you guys keep asking about finance junkies. Let me talk about finance junkies. Everyone's asking about that. Let me address that. So, again, dude, I think it's pretty obvious for why finance junkies is not happening anymore. And I think a lot of people saw it as the podcast was evolving. For those that don't know, I have another podcast with 4 other guys, or I used to have a podcast, and we ended it yesterday. Look, dude, the reason is, honestly, a lot of us are like, Vitaly didn't even show up because of how busy he is. Vitaly's literally on a new 8th month contract at some show that he's working at, and he couldn't even make that episode. So I get people's arguments. I was reading the comments of just like, do it once a month, do it once a week, whatever. It's really difficult for all of us to have time to be able to do it. And so that's the issue. It's not just Chris. It's not just me. It's not just Vitaly. It's tough, dude. Every single day. It's tough or even 2 times a week to be able to do it. You guys remember, I do 2 streams on this channel, right? Which takes a lot of work out of me, and I got to prepare for those. Then I have a daily Palantir episode that comes out every single day, so that has some work. I have a lot of other things I work on throughout the entire day. I'm managing my Twitter every day. I do a daily Palantir newsletter every single day. To get ready to do another show at night, it's just tough. And with the inconsistency, you guys know me. I'm all in or I'm all out. Like, I was all out of the gym the past 2 months. Therefore, I turned into a slob. I turned into a pig, and I gained weight. Now I'm all in. I eat 1 meal a day. I work out, and I'm going to drop 30 pounds in the next 2 months. There's a switch in my brain mentally. It's not a healthy switch. In fact, it's a toxic switch, but it is a switch. If I go all in, I go all in. And if I'm out, I'm out, which means there's no in the middle. Oh, I have like a cheat day. Dude, if I have a cheat day, I'm going to be cheating for a long time. So like when I get serious about something, especially my weight, I get really serious. There's not really a lot of potential in doing the show if it's not growing, if you can't make the show, and if it's not consistent because everyone's just so busy. So, I mean, look, that's just the nature of why it stopped. I think you guys could tell on our faces, like by the end of the day, we got tired trying to do the show. I mean, even Chris, like Chris is this overnight job and everything, and it's really tough for him to get ready to do the show and get all excited and talk about the markets. And it was fun a year ago because we were all brand new to it, and obviously we were getting exciting and learning all that stuff. But we all 4 got very busy, very, very busy, and so that's why it stopped. That's my reason. Now, people are talking about what Carlos's reasons are. Carlos has whatever reasons he can have. I quite frankly, I can't speak to Carlos's reasons. If you want to know Carlos's real reasons, DM him, see whatever he has to say. I didn't know he was actually going to do that yesterday, where he said he has a different reason, because in our meeting last week, when we all decided to end the pod, it was very amicable. There was no fight. I remember the meeting. I was there. And we all came to the conclusion, like, yeah, we'll keep the channel alive. And like, if we want to go live here and there, that we can, but it's just becoming really hard. And Vitaly was on board as well, because he was like, dude, I'm about to take a fucking show for the next 8 months. Like, I don't even know if I could make 2 times a week. And so people are like, oh, find rotating guests. It's very difficult to book a guest as well. A lot of people are busy at that time of night. And if we could do it in the morning, I would love to do it, but those guys have actual jobs, right? It's hard to do it in the morning as well. So from my understanding, that was the reason why the podcast ended. Now, if Carlos has a different reason, I don't know what that reason is. You guys can ask him. I still don't know what the reason is. He has not told me about the reason. But for whatever reason he talked about yesterday that he says there's another reason he thinks it ended, it'll be news to me. Because genuinely, I'm not even just saying this to say this. I don't have whatever reason he's talking about. From my understanding last week, when we decided, all right, guys, we got to end this, it was mutual, it was amicable, and it was like, yeah, dude, it's been a good run, but like, we just can't make this every week. And okay, Carl's, dude, look, the channels, Vitaly, Carl, whoever wants to run the channel, whoever wants to post on the channel, they are more than welcome. There's no hostage situation of the channel. I don't own the channel. I'm not going to use the channel. So if Carlos wants to make videos on the channel, he can make videos on the channel. But again, it's very difficult to keep momentum going, and it's very difficult for something to grow like that. And so that's ultimately why I decided to leave. We might still be able to do once a month. It would be spontaneous, though. I don't think it would happen like as a scheduled thing. But again, guys, for me, look, here's the other thing. I'm going to do a video eventually. I might go live and just like clip it as a video. A lot of people, I told you guys this last week, a lot of people have been texting me on Twitter, DMing, hey, I want to do what you do. I want to, cover the markets all the time. I want to quit my job and just do the markets. And, they're like looking for advice. Do they think it's a strong strategy? All this stuff. It is really, really difficult to grow on social media. It is not an easy thing to do. And I know what it has took for me to get to this level and to do it. And I know what's going to take to get to the next level. Finance Junkies was not at the point where we could get to the next level, given consistency, given a variety of other reasons why I think we weren't going to be able to grow. And for me, the way my mentality is, if it's not growing, if there's not a potential for it to grow, I mentally check out. I'm not in, because I'm already into so many other things that I'm building. It's very hard to be mentally checked into this thing 2 days a week if it's not even growing and if there's no potential for it to grow. And it is what it is. You have to be making some record of canceled podcasts, but every new version you bring was better than the previous. Yeah, I have like 3 or 4 other podcasts that I've canceled, right? It's just the life of a creative. And so all the people that are like messaging me saying, hey, I want to do what you do for a living and I want to try all this stuff. First of all, there's not a lot of money in it. Guys, the market open stream makes $60 every day. And now look, $60 is amazing. It's fantastic. But I think, having almost 2,000 people show up for a live event for 90 minutes to 2 hours is probably worth more than $60. But I'm not monetizing. I'm not doing any sponsorships. I'm not pitching any Patreon. I'm not doing nothing. Why? Because I don't care about the $60. I care about something much bigger, which is building a brand. And building a brand is very difficult. And when you're building a brand with other people that are not always aligned on how to build that brand, that is also very difficult. And so from that perspective, it's very difficult to grow anything on social media. All the people that are asking, should they quit their job and start social media? My answer is no, because you have to be so fucking obsessed with this thing, like so fucking obsessed to even have a chance to win because it's so competitive. And you're probably not going to be that obsessed. So you honestly shouldn't try. That's just the harsh truth. But if you are, then yeah, go for it. But if you're not going to be, then you're going to fail. Like it's cutthroat, ruthless, competitive. There's 600 million people on Twitter. All of them are tweeting every day trying to get attention. No one, you are not guaranteed the privilege of people listening to you. You have to work to get to the point where people actually care about listening to you. People don't understand how fucking difficult that is and how much mental, instability you can go through from an emotional perspective just to keep up that persona and keep up the growth of that persona. Because if you're not growing, you're not doing it for $60 an hour. You're doing it to actually try to build something. So my point is, if Finance Junkies wasn't growing, then I was mentally not ready to keep doing it. And the lack of consistency. I mean, I go to California and there's no shows. Like that obviously shows you the other 3 guys did not feel like doing the show if one person was gone. So everyone's saying, oh, just rotate the guests. It's really difficult when you've got to vibe with people and to just bring in someone brand new and then just, do the show. It's not easy. It's very difficult. So from that perspective, I checked out a couple of weeks ago. I was like, you know what? This is the right decision. It's time to move on. And I got to focus on myself, because if this thing's not growing, you can only put so much time and effort into something, given how hard it is to grow something, else like on your main channel and your other accounts. Jose says, I was working a typical 9 to 5, then 6 to 12 with social for like 2 to 3 years before I even thought about quitting my job. Yep. Look at that. He was working 9 to 5, takes an hour to get some food for dinner, and then 6 to 12 on social. And that's just what you have to do. Dude, I was doing the same thing. I was driving 120 miles up and down New Jersey, and doing my thumbnails at the job I was working at, hoping my boss would not really see that I was working on thumbnails. And then I was coming home, recording 3 videos, going to bed at 3 a.m., waking up, doing the drive, coming. Like everyone goes through it. And once you've worked that hard and you're growing and you're at a point where you can maintain that momentum and get to the next fucking level. And obviously I think we've done some things this year that have helped us get to that next level. If you're doing anything that is not worth your time because it's not growing, you're going to naturally not want to keep doing it, because you know how hard it is to grow anything in general. And that's why it made sense for us to quit Finance Junkies. Granted, it's not that big of a deal in my opinion, because Vitaly will be on the show, Chris will join the Market Open, Carlos will be on a bunch of times, Steve will still be on. So I think this whole community is not going anywhere. The community is still here. It's just not going to be in the form of the podcast. That's all. And that's it. That's pretty much it. Amit, you need to attract more females on your show. I do need to do that, because that video with Kat, you guys are crazy, dude. That video with Kat, let me show you the analytics on that. That video with Kat Orman, who is a girl who's a founder of a company using Palantir software. Dude, that video got more views than the podcast with Shyam Sankar. Like at some level, bro, it's like, what? Like, I think I know why you guys were clicking. I think I know. So this is the video. Video made $133 for 18,000 views. And so again, in social, people are like, oh, there's so much money. Dude, $133, as grateful as I am for that, for 18,000 views is just like, no, dude, like that's not a lot of money for 18,000 views. Again, grateful for that. But if you do YouTube to make $133 because you got 18,000 people to click on a video, like you're just going to fail, because that's not going to be the payoff that you're looking for. What I'm looking for is that 63 subscribers. That's what I care about. I care about the growth. I care about 63 new people who don't know who Amit is came across my brand. That's the only, if this number was fucking 0, I wouldn't care. This 63 is the most important. And to be that obsessed and have a mature understanding of social media, to know 63 is less than 133, but 63 matters way more than 133. That's what I think a majority of people don't understand when they try to do content. But anyway, 18,000 views, right? 18,000 views. Now let's go to the Shyam podcast. maybe the hack to growing the channel is just getting more girls on the channel. Sham's podcast, 11,000 views. 11,000 views. $127. So yes, almost the same amount of money, 35 subscribers. 11,000. So 11,000 people said, hey, we're going to listen to the CTO of fucking Palantir talk for 20 minutes. 18,000 people clicked on a random girl they don't know about, probably because she was pretty, and people wanted to just see what she had to say. It's hilarious, dude. It's absolutely hilarious. It's hilarious. Anyway, do you guys get my point about what I said about finance junkies? Do you guys get my point? I hope you guys actually understand my point, because there was a point that I was trying to make, and I couldn't go in depth into this yesterday, but like that's the broader point that I was trying to make. Chris will join, not just audio. Chris will be on. He'll be on as like a contributor live. It's just sometimes he can't join from his computer, but he'll be on definitely live with his face and all that stuff, and he'll talk more. The Vlad interview, you guys asked for the Vlad one. Let me see the Vlad one. You know what? I might as well just show you guys the analytics for the whole year. But like, this is the Vlad one. Vlad got 15,000 views, $164. So again, you see, YouTube's kind of crazy. The cat interview got 18,000 views, $133. Vlad got 3,000 views less, but he still made $30 more. That has to do with CPMs and RPMs. But I got 173 subscribers. So 173 new people found me because of this. By the way, I have a funny story about this Vlad interview. I was drunk in California. Okay. This was before I went to the AIPCon event and all this stuff. I was just with a friend and I got drunk. I watched parts of this Vlad interview while I was drunk, and it kind of hit me that I actually interviewed Vlad, bro. It was one of those moments where you have like a surreal moment and you like realize you did something. And so I'm drunk, dude. I've like 9 glasses of wine in, and I click on this Vlad interview and I'm looking at it and I'm like, is that the fucking CEO of Robin? And is that me? Am I asking him? Is he looking at me? Like, it was crazy. It was a crazy feeling, but it was so cool. It was cool. It was cool to see that. Okay, let me show you the analytics for the whole year. I'll show you guys fucking everything, bro. Let's see this. So let's do 2024. Okay, you guys can see everything. You'll see revenue, everything. Okay, so here we go. This is what the channel has done this whole year. 2.5 million views. That's up 38%. 700,000 watch hours. That's up 77%. 9.3 thousand subscribers. That's done very well. That's the number I'm the most proud of. And then 23,000 in revenue. So again, if you think 2.5 million times people watching your videos is worth 20 grand, sure. But in the broad scheme of things, that's obviously not a ton of money for that much attention. But it's not about the money. It's about building the audience, because there's other ways to make money in the world, but any way to make money requires having an audience. And so the 2.5 million and the 9,000 subscribers, I mean, think about the 9.3 thousand new people have been introduced to my world that know who Amit is. Even if they don't watch every day, they've come across my ecosystem, right? That's the number that matters. Honestly, if this 23,000 was 43,000, that'd be amazing. Like, of course, I'd be happy. But if it was 10,000, it wouldn't be the worst thing in the world, because those 9,000 people matter way more than that 23,000. If you just divide 23,000 by 9,000, I mean, like, obviously each subscriber I think is worth way more than just 23 grand. So those were the analytics. And let's go to the 2023 analytics. 2023. So if I do 2023, so 2023, yeah, look at that. We made 31 grand in 2023. We're already at 23. So we're obviously doing well on the revenue. 3.9 million views, 800,000 watch hours. We're already at 700,000. We have 6 months left. And then 9.7 subs throughout the whole year, 2023. We're already at 9.3. We have 6 months left. So channel's doing well in 2024. But again, it's not about the money. It's really about building that brand. And again, the reason I'm bringing this up and I'm stressing it's not about the money, it's about building the brand, is because if people don't understand what it means to really build a brand, you will not be obsessed with trying to build content. And so for everyone who's messaging me saying, oh, I want to do what you're doing, it's like, look, I know it looks kind of fun and easy, but it is. I was downstairs fucking trying to get a tweet out while my mom, you know, the thing about my mom, dude, I got to say, my mom tells me to do something and I'm in the process of doing it, and she tells me to do another thing, and it just drives me crazy, because I'm like trying to do the first thing. We have some guests coming over later. And then she's like, oh, by the way, dude. And I'm like, I'm in the middle. I'm like trying to focus on trying to do. And somehow, some way, she will find a way while I'm in the middle of just putting out a tweet to ask me to do something while I'm downstairs. And I'm like just trying to get the tweet out. And it's just like, I don't know how I think she sees me go on my phone. He's like, oh, he's not doing anything. Let me ask him to do something else. I will do whatever she wants me to do. But when she asks me during the composition of a tweet, it drives me insane. Mom, if you're watching this, we gotta stop that, because it just goes. I'm like trying to get the tweet out and I can't focus. But my point is, why am I bringing this up? That's how obsessed you got to be, dude. When you got to put out a tweet, you got to put out the tweet. And even though your mom's trying to get you to do something like that, there's a level of fucking like you're in that moment. You got to be in that moment. You can't just delay that moment, because then you might forget the idea, or you might not be able to time it correctly. You might not be able to put out what you want to put out. There is a certain level of fucking obsession that is required for social media. And it cannot be motivated by money, because it's just not going to work. You have to be obsessed with building the audience. And I'm in that zone. And so that I just want to go all in on that and keep working at the end of the day to be able to do it. Welcome to life with parents. Again, I love helping my mom, dude. I love helping her around the house. And there's no complaint ever. It's just when she starts asking when I'm tweeting, bro, I'm just like, oh my, I don't know how she times it every time. Every time I'm ready to start typing. And then she's like, oh, by the way, I need you to do this. And I'm like, I just need a second to put the tweet out, and then it'll fucking work. Tesla Palantir says working 24/7 for $20K is wild, right? This is my point. Working 24/7 for $20,000 is, and it is 24/7, dude, because basically you're on constantly. Like there's sleep, and then as soon as I wake up, it's getting to the grind mode. Like there is not an hour of the day where I'm sitting just like watching something. Now on the weekend, I tend to take Sunday off, and like I'm still tweeting Saturday and Sunday, but Sunday I tend to really relax, dude. Like Sunday, I probably don't do anything on Sunday. That's for sure. So that day I get off, and then Saturday I just, I'm doing a lot of random tasks around the house and errands and stuff, but I'm still tweeting. But Monday through Friday, it's a 24/7 game outside of sleep. You constantly are, because news is always breaking, right? Content's always out there. And here's the other thing about Twitter. There's always someone to reply to, because given how my Twitter has grown, there are a lot of replies. And so I feel guilty whenever I'm not on Twitter, because I'm like, I could be replying to more people. Why is it important to reply? Because when you reply, the initial post gets more momentum. You start to respond to people. People start to feel more connected to you as a creator, because you're actually giving them a response to their comment. I hate leaving comments unresponded to. There's no way I can respond to all of them, but I still want to give as much as I can. And so I'm constantly there just putting out responses. And if you, and like, there's like never ending work. So I've made my own metrics in my head on what I need to see on Twitter every single day. And that's how I know I can mentally kind of at least check out a little bit. Once I hit those metrics, and thankfully it's been a good 6 months, every single day, those metrics, we continue to hit them and supersede them. But it's like you're constantly in that game, right? And I just think anyone thinking of doing social media, if you're not ready to get that obsessed, you will fail. It is that simple. You will fucking fail. It is so difficult to capture people's attention and then meaningfully provide them content they care about, that you will fail if you don't get obsessed with it, especially if you want to actually make this a full-time thing. And then even if it is full-time, 20 grand. Now, granted, I'm under monetizing because I haven't accepted sponsorships and all that shit. But again, I don't want to do sponsorships and all that stuff. I want to keep building this independently. So at what point do you have to delegate some of the work? I have some VAs overseas that do a little bit of stuff here and there, right? So I have delegated. It's not like I haven't thought about outsourcing some of the work, but the majority of the work as a creative is creating content. And that's a you thing. You have to be doing that. So if you're not doing that, no one's going to do that. Like for example, I can't pay someone in the Philippines to be like, hey, can you can you copy and paste everyone's response on Twitter, put it into ChatGPT, generate an AI automated response, and then log into my account and start responding in mass to 500 people so that I can put out 500 replies. I mean, I could do that and it would be relatively cheap, but the responses would be garbage. The people on the other side would know that this is not like a real response. The quality of the content would decline. And ultimately, you would have sort of a robotic feel of your account, and then the brand would be diluted. So when it comes to actually making content, you have to do it, and that just means you have to work your ass off to actually do it. And I think a lot of people don't understand how hard that is. Amid start to ask people to like, comment, and share, you would be amazed what something so simple would do for you. Here's another thing: I've never asked. At none of these streams, you guys hear me say like or subscribe, or my daily Palantir videos. I just don't do that. And it's not that I don't want to do that. It's not that I care about doing that. Ever since I started YouTube in 2021, I never did that. And the reason I never did that is because I heard every other YouTuber saying it. And I was like, oh, I just want to be different. I don't want to ask. I don't want to beg for a like or a subscription. So I just didn't fucking do it. And so it became a habit. And ironically, people ended up liking and subscribing, even if you don't ask. But granted, probably would help to do that. But I just don't do it. And I think some people also like it that the guy's not always constantly asking for a like or a subscription, because look, at the end of the day, if you like the content and you subscribe to it, you'll fucking subscribe, right? Like it's not that hard to subscribe if you actually care about it. But it does get annoying sometimes when people are always asking. June says, I think why people liked FJ was because it was different personalities, had a lot of banter. There's a need for a fun show like that. Let's do once a week banter show with a guest from the chat. Again, as much as I would love to do that, and I think there's a way to probably incorporate guests onto this stream, because we haven't incorporated guests onto this market open. We could probably do that, but it's going to be tough, dude. I mean, like, it's going to be tough to do finance junkies every week. I'll say that, like we might go once in a while, but I'm telling you, we all decided to come to that conclusion, and it's going to be tough to actually go live every week. But again, it was the right decision in my opinion. I don't like building stuff that I don't think has potential. And if something doesn't have potential, then I'm not going to do it just to do it. Like, there's just too much other fucking work to do. And again, Vitaly can't even make it. Dude, Steve was lucky enough to be free last night. Like, he texted me early in the day. I was like, yo, are you free? You could actually make it? Steve's usually not free because he got some new high-level job. And so then like someone like Couch Investor, he's a great guest, but I think he's in Argentina or something. So the time schedule, like, there's so many hurdles to try to get a guest when someone can't make it. And then if someone can't make it, it just becomes hard to do it with one or two people. Bitcoin's breaking out? No way. No way. Oh my God. Oh my God. Finally. Oh, thank God. Bitcoin's up. That means Robinhood might be up. Yep. There you go. Robinhood 2193. Thank God. Fucking Bitcoin is up. This is what happens when I start talking. We get a green candle. I guess I can't end the stream now, guys. We got to keep this green candle. Oh my God. Thank God, dude. That shit goes to 62,000. Robinhood's going to, dude, if Bitcoin goes to 60K, Robinhood's going to 18. I'm sorry. Although it's so stupid because Robinhood is so much more than Bitcoin. We know this. The only reason it's going down is because of Bitcoin. And so hopefully it maintains its levels. But if it doesn't, there will be a dip opportunity there. Is Chip Chat coming back? So here's another thing, right? That podcast I started with Jose. We just decided a couple of weeks ago, why doesn't he just become a contributor on the show for 10, 15 minutes every couple of weeks versus like starting a legit podcast, right? Because even maintaining that podcast was so much work. You know, Jose has a kid. He's working in his regular life, right? So he comes on the show every other week and he talks about semiconductors, and that's our segment. So I think a lot of the evolution of like these podcasts with Amit will ultimately turn into segments on the show. And the show itself will just get bigger and longer. And those segments and people can individually watch if they wanted that content, right? And I think that's how also it can play out. Shout out to TJ. TJ, did you sell those puts on Robinhood? TJ texted me today. We were looking at the $20 puts on Robinhood for July 19th. Those were giving us a nice 60-cent premium. And even the podcast I had with TJ, it turned into part of the market open, which made it even better in my opinion. So I think that is the evolution of how guests can come on the show and still provide. TJ says I'm a segment, damn it. TJ, you're the best segment, dude. I don't know. We had 1,000 people listen to us for an hour talk about options. I mean, that was the fact that 1,000 people were willing to listen to TJ teach about selling options is just incredible. He said he sold the options and he had 100 on TSL. What's the strike on TSLL? Was it up today? No, it had to be down because Tesla was down. What's the strike on TSLL? Where is it at? It's at 813 today. Sell put. You probably did $7, right, TJ? You probably did 7. I bet you did 7 July 19th. I could be wrong though. That's 38 cents. That's not bad. That's not a bad premium. 7. Yep, 7. That's what I thought. See, I'm getting good enough to fucking predict how TJ is going to do it. I'm getting good enough. Amit, your CEO interviews have been amazing. So that's the other thing I'm working on. I am working on getting. I think I said this a couple months ago. I think there's a real Lex Friedman path, not for this channel, for a new channel, but it would use those guests as a way to kind of launch that kind of Lex Friedman arc of like really long form interviews with really special guests. Got 29 cents. Okay, not bad. So what's 29 divided by 700? That's a 2%. 29 or 3%. 29 divided by 700. 4%. Oh, my bad. That's a 4% return. Not bad. 4.1%. Not bad. I think I think we can get some of the best guests in the world, dude. I think we can get the Michael Saylors, the Brian Chesky's. I think we can really get some strong CEOs, and there's a lot of things in the works to get even bigger CEOs and entrepreneurs and stuff. And I think I have a knack for knowing how to ask questions And I think the next evolution is long form 2-3 hour discussions with really important people, asking really good questions, making really good content. And so I think that is an evolution that probably doesn't happen this year, but early next year, that is going to be the main goal. And that's something we got to work on, because I think that can do really well. I think it can go really. I mean, look, I don't know if we get Elon, but I think there's a chance if we just keep building up to it, right? It's just a question of, a lot of this stuff is spontaneous. Like if Elon were to happen to see me interviewing some really important person pop up on his X feed, which he's liked my tweets before, so he's at least acknowledged like someone named Amit has tweeted about him before, right? Like there's potential for things to, and now that my network's growing, there's ways to contact people that can contact other people that know certain people that can get things done. I mean, literally over the past couple of months, a lot of that has been just through networking. So I think that's the next evolution of growth in 2025. We got to see if we can get more and more people on the show. Because again, the way to grow also from a podcast perspective, you need the best guests. This is why I kind of cringe when I see new podcasts start, because I was that new podcast in 2020, 2019, starting and thinking people would give a fuck about what I had to say. If you don't have a guest, there is no reason for people to listen to your podcast. Like you have to either be talking about something super niche, which is what I figured out in 2021. Oh, I care a lot about Palantir. Let me talk about Palantir. That's something people actually want to consume. You actually give them a reason to listen to you, and then you go from there. Or you have to have a big guest and leech off their name, essentially. If you just throw a video or a podcast out into the wild and be like, hey, here's my thoughts on, like, dude, it's not going anywhere. It's just not going, it's not happening. And I played that game for 3-4 years, and it sucked. It hurt really badly when you put something up and no one watches it, or there's no chance for someone to watch it. But you learn through those and then you move on, right? And you got to take those learnings and really apply them aggressively to when you move on to the next leg of growth. And you've got to be ridiculously obsessed with getting to the next leg of growth, or else you're going to fail. It's just a very cutthroat business. I don't care about Palantir and I still listen to you daily. Yes. And see, I think there have been a lot more people that have been attracted to the channel, because even though they don't care about Palantir, they do care about my thoughts on other things. And that has happened because they tuned into a couple market opens. They tuned into some different interviews here and there. And they were like, okay, I'll give this guy a shot at getting into his perspectives, his analysis, all that stuff. And that needs to grow even bigger and bigger over the next couple of years, because then you actually develop a really, really big brand, right? And that's what we're in the process of. Like, we are in that moment right now. It is happening right now. And unfortunately, if something's distracting you from that, like Finance Junkies, because it just was not growing, it did not have the consistency, then you got to move on. And you got to keep going. I found your channel because the earnings live streams. Yeah, earnings is a big day. I mean, look, and earnings, we put up really good numbers during earnings. Bitcoin back below 65,000. This cycle in Q1, Nvidia, I think we had 3,500. Palantir, we got close to 6,000. Like those are the moments where you have to capitalize on the opportunity. And even something like that, people don't understand. Like why did I go live for GameStop yesterday for the shareholder meeting? Let's talk content, Amit. I went live because a lot of people were fucking interested in the GameStop meeting, right? This is just the nature of understanding media. So I think 1,300 people showed up. I would argue probably 70% of those people did not know who I was, right? Random people searching for GameStop. They find me, they click, and they're listening for the stream, for the actual shareholder audio. That's what they care about. And then they stay for the next 10 minutes because they're willing to give me the benefit of the doubt to break down what I just heard, because they cared enough to actually get into the stream. Now, unfortunately, I shit it all over them because I said this was the worst call ever, and a lot of them gave me some nice comments about how much of a douchebag I was. But nonetheless, it was a horrible call, and I had to be honest there. But that's where you capture audience. That's where people actually discover you. And then they may join the market open the next day. They might, so there's so much in regards to actually building a brand. It's very difficult. But you've got to be 24/7 in that zone. And you got to just keep trying to do it. I found you looking for Palantir in 2022. Yep, I think a lot of people found me there. Mark says, you taught me how to make love in our dreams. I don't even know what to say to that, but okay, great. When Carp interview, not going to answer that, but let's just say things are in motion, and hopefully that'll happen. Oh, wow. As I'm talking about YouTube, I get a notification from YouTube. You've reached 35,000 subscribers. Okay, cool. Dope. But again, we got to keep growing. And that's why you guys see I never bring up numbers or milestones, because again, 35,000 does not matter. It matters how much can you keep that momentum. It's kind of like earnings, bro. Like Nvidia did 26 billion in revenue. Okay, cool. What are you going to do the next quarter? All right, you're at 35,000 subscribers on YouTube. Okay, cool. When are you going to get to 50,000? Because in the grand scheme of things, like if it's not sustainable, why should anyone give a fuck, dude? If you stop posting tomorrow, no one cares. If Nvidia stops producing results tomorrow, people will sell the stock. It's like it's just the nature of entrepreneurial anything. If you stop growing, you fail. This is why America is so amazing, because they encourage growth. By the way, I was in the sauna today, and they were talking about the Celtics win their championship, and this one guy in the sauna, he was like, "Forget the Celtics. The Democrats are making us communists." I just started laughing. He started going down this rabbit hole, dude. He legit started talking like the frogs are gay type of vibe. He was just going all in on how America's becoming the worst country, blah, 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 blah. And just went, I was like, we're turning into a communist country, all this shit. I just thought of that because I was saying like America continues growth. But like I'm in the sauna, I have my headphones on, I'm listening to these guys talk about the Celtics. And then this guy walks in, he's like, forget sports. America's turning into a communist country and the frogs are gay. And he just starts going off. It was kind of funny. But it's stuff you hear in the sauna. Anyway, the point is you got to continue the growth, and America gives you the opportunity to go. And here's the other thing, guys. I talked about this on my dad, right? Because on Father's Day, my dad wakes up every morning and goes to work. He's been doing that for 40 years, had a liquor store, right? Worked every single day, 10 hours a day. The reason I work 24/7 is because a lot of me is guilty about how hard my parents worked. Specifically my dad, right? My mom had a 9 to 5. My dad more so had like a 8 to 11, quite frankly. And if they worked that hard, then who the fuck am I to be like, well, I can do one stream a day and call it a day, or I don't have to go live even though the GameStop shareholder meeting is at like no, bro, who the fuck are like, you have to work. Doesn't matter if it doesn't make any money. You have to work, and if you believe in the long-term vision, eventually it will pay off. But the one thing I got from my dad and my mom is like, you have to put in the fucking, and more so from my dad, right? Because my mom is not entrepreneurial. She's very creative. I got my creative side from my mom, but she's never been an entrepreneur. My dad's not worked for a single person his whole fucking life, dude. He's turned 63. He has not worked for anyone his whole life. He figured out every single dollar he's made is because he did it from his own business. And again, even when I was younger, I didn't think I would be an entrepreneur, quite frankly. There was a part of me that thought I would be entrepreneurial, but another part of me was like, oh, I remember in 9th grade, I went to my first investment banking fucking like lunch or something, where they invited a bunch of freshmen to like listen to these like people who worked at Citibank about investment banking, and like 250 of us showed up in these suits. We all were some fucking dorks. We showed up, and then the Citibank guy's like, so yeah, I wake up in the morning, I check my Excel spreadsheets, I have my meetings, and immediately I was like, I am not fucking going down that path. That is fucking boring, bro. There's no way in hell. So at that moment in 9th grade, and I always knew I wanted to be an entrepreneur, but at that moment I was like, yeah, the corporate route just sounds boring. And literally, dude, my senior year of college, I didn't even apply to any jobs. It was kind of crazy. You would think that's kind of crazy, right? You would think like my mom, and she's like, wait, you're not applying for a job? What are you gonna do? And I was like, I'll just figure it out. Like literally, I was just like, I'll just figure it out. And I fucking figured it out. And granted, my parents weren't going crazy, because obviously I started my business when I was in college. So I was making money. It wasn't just like, oh, I'm going to be a lazy bum on the couch and I'll figure it out. It's like, no, I'm doing something. I'm going to figure out how to expand and grow that. But I always figured it out. And if you're doing social media and content, you have to figure it out, even if the monetization is not there. But the tendency to figure it out has to be there. And I think it's very hard for a lot of people to keep up with, or to understand how deep it has to be to actually try to figure it out. I knew Amit was all about branding when I didn't feel well in Vegas, and Amit was concerned that it would be bad branding on his brand if I died. Yeah, okay. So June, let's just say June consumed some substances during Vegas. We won't say what substances. And she wasn't feeling the best. And I was like, June, if you die, yeah, people are going to say someone died on the Finance Junkies trip, and it's going to make us look bad. So your ass better not die. So I'm thankful June is live. A, because yes, it's good that she's alive. But B, because that would look pretty bad if you host a little meetup and then someone dies. Like, that wouldn't be the best thing in the world. So thank you, June, for not ruining our brand. That's important. Well, now the brand is gone. There's no more Finance Junkies brand. So, dude, that was hilarious. June, I can't wait to party with you again. That was hilarious. That was awesome. Amit, you have the setup for an OnlyFans page. Again, I told you guys that pedicure I got, it deserves an OnlyFans. It absolutely deserves an OnlyFans. Maybe one day. No, I'm just kidding. Actually, maybe no, I'm just kidding. Well, maybe no, I'm just kidding. All right. So what else do we got in the markets? I think we ended there. We don't have a market open. Market closed yesterday or tomorrow. 65K on Bitcoin, S&P 548, ARM at what, 175, SMH 276. Where's Palantir? Robinhood 2193, Palantir 2576. PayPal got decimated today again, down 1.68%. Apple down a little bit. Intel 3063. Yeah, nothing that crazy. I mean, look, the S&P had a good day. Individual stocks had a good day. Where's Nvidia? Nvidia had a good day. Nvidia 136. Wow, Nvidia's still holding 136. We'll see what happens on Thursday. Now, after a great day in the markets, let's see what happens on Thursday. But the markets will be closed tomorrow as well. I knew Amit was about branding when he forcibly used a hot iron to brand his initials on my back. ET, you weren't supposed to tell everybody about that, but now they know. Amit, have you watched the 36 Chamber of Shaolin yet? Okay, so I have not watched it yet. I was trying to watch Netflix this weekend. I clicked on this movie. Let me tell you guys the movie. Dude, something is wrong with my attention span. For 10 minutes, I was just like, I can't fucking. The movie was called, it had a Johnny Depp and what's the other guy? Christian Bale in it. The movie was called Public Enemies. Yeah, Public Enemies. Is this a good movie to you guys? What's the IMDb? Dude, after 10 minutes, I got so fucking bored. I was actually trying to sit down and watch a movie. I was like, you know what? I should just relax my mind. I should try to watch something. 7 out of 10 on IMDb. Well, you know what? The first 10 minutes, 0 out of 10. Fucking boring. Okay. I don't know if you guys like this movie, but I couldn't do it. I ended up going back to TikTok. I watched a little bit too much TikTok on Sunday, bro. Like when it's time to relax, I watch TikTok. And there's this TikTok couple that I am just obsessed with, bro. You know what? I'm going to show you guys the fucking couple. I'm going to show you guys. I'm just so obsessed with this couple. I watch all their stupid little TikToks. But that's more entertaining than whatever this is called, Public Enemies. Where's this girl on TikTok? Okay, this thing, bro. This couple right here. I don't know why I'm obsessed with this couple, but I'm obsessed with this couple. I think it's because the girl's really pretty or something. I don't know. But like, it's cute. It's really cute. This couple right here. They just make videos inside in their car, just talking about stuff. And I've like binged all of them. I'm watching all of them. I don't understand why. I don't get it. I don't know why, but this is what I watched on Sunday over the movie. I thought this was more entertaining than the movie. See how they're sponsored by Celsius. This is how you know Celsius is everywhere. They were drinking Celsius in this one, but like, this is what I like watching. I don't know what to tell you guys. This is what I like watching. But yeah. So for in terms of Netflix, no, I haven't seen 36 Chambers of Shaolin. Maybe I need to watch them more. But I just haven't been able to watch a movie. Yeah, dude, Celsius has sponsored a lot of these influencers, bro. A lot of them. They're like all of them fucking Celsius. All of them. Nice 8% pop today. Nice 8% pop. But yeah, that's what I watch. Sticky Monkey says you need help. Look, I get it, but I don't know. With content, I'm very niche and particular. And if I'm bored in the first 5 minutes, then I move on to like something. I don't know. I think they're very entertaining. They have unique dialogues. And I kind of like the dynamic between them because the guy is like super animated. The girl's kind of chill, laid back. I think that's kind of how I am in a relationship. I'm much more animated, much more like energetic. And I don't know. I kind of like watching the dynamic. It's just cooler to me. This is actually my bear case on Netflix 2 years ago. I was like, yo, if everyone's watching YouTube and like user generated content, why would people watch Netflix? Now I was wrong because obviously people will watch Netflix, but like my bear case anecdotally was just like, I don't see what's the need to watch Netflix when you have that. And so that's why it's harder for me to watch Netflix. I'm too scared to download TikTok in case it makes me even more dumb. Dude, it definitely makes you dumb, but it's like okay, I'm like fully relaxed. I don't give a shit about anything today. I'm like just checking out for the next hour. That's when I'm on TikTok. If I'm like trying to seriously learn something, like no, like TikTok's gonna be hard to get a grasp on. But otherwise, you know, if you just want to relax, then TikTok, there you go. And now I have my playing cards. So we're gonna learn some more magic tricks and keep going from there. All right, I think that's it for me. Influencer marketing budgets are gone. That business dying. Okay, so I saw a separate chart showing that advertising revenue was coming down and influencer marketing was going up, actually. So I think you're wrong on that. Let me see if I can pull that up real quick. That's another reason I like being on Twitter, because I consume so much news that like I'm able to pull up these stats, and it's like helpful talking about stuff. Howard tweeted this. Let me show you this. Like influencer marketing is, the budgets are actually going way higher than what most people thought, and the traditional advertising budgets are actually going way lower. Let me see if I can get this chart. But so I don't know if that's necessarily accurate about influencers. Does he have this chart? He tweeted on Sunday. Did he tweet on Sunday? Okay, no, I can't find the chart. It was a good chart though. If you look it up, just influencer marketing spend, you'll probably find it. Influencer marketing spend. Let's see if it pops up on Twitter. Twitter search needs to improve. It's just not been the best. Oh, here it goes. I found it. As I say, it's not been the best. I find exactly what I need. So there you go. I guess it's getting better. Look at this. Yearly ad spending on TV, 75 billion to 50 billion from 2018 to 25. Influencer marketing in 2015, it was a couple $100 million. Now it's closing in on 10 billion in 10 years. So the growth is pretty dramatic here. That's good for Facebook and Instagram and YouTube and stuff. That means creators are getting more money. That means advertisers are coming to the platform. Not the best for TV spend, even though TV spend is still a lot. Okay, cool. Is there a Fed meeting tomorrow? I didn't think there was a Fed meeting. I don't think there's a Fed meeting tomorrow. If there is, I'll tweet about it. I don't think there's a stream, but I'll tweet about it if there is. If not, then we'll cover it. Or if there is, we'll cover it again on Thursday and keep going from there. I'll get a stream tomorrow. I'll find someone to come talk stocks with. I'll hit up someone, maybe someone you know, maybe someone you don't know, and we'll talk about stocks tomorrow. Probably like 1 p.m., 2 p.m. And we'll still do a stream, even if we don't have market close or market open. All right, that's it for me. Tesla says Amit's not lonely. He has all of us. Yes, I have all of you. And quite frankly, when you're building a brand, that's all I care about right now. Like I really don't care about anything else. I care about building the fucking brand. And I enjoyed. I mean, Rodney made a good comment in the morning. Like someone said, "Oh, Amit, the market's closed tomorrow." And I was like, "Damn, the market's closed. We can't do the show." And then Rodney was like, "Damn, you must know Amit loves doing the show if he's upset that he can't go into work tomorrow, because technically this is work, right?" But when I missed it in California, it sucked, dude. Like I hate missing work because I love doing it. So, and I love doing it because you guys are here and I appreciate it. Amit doesn't mute his trolls. That's another thing. There's another thing. I believe in free speech, dude. I don't fucking mute much. If someone's spamming, it's like, all right, get the fuck out of here. But I don't mute the trolls. People say whatever they want. Like, again, my skin is so thick. If you saw it at a club, you would ask for its number. So when you get to that level of thick skin, then the trolls are just the trolls, right? People can say whatever they want. At the end of the day, there's no reason to stop people from saying stuff. If they're spamming, it's another thing. But if not, then let people say what they want to say. And that's why I think the chat has been good, right? This is one of the best chats on YouTube. We're never going to be subscribed to chat or join as a channel member to chat, because I care about this being a show every single day and making it fun. See, Wong says the same jokes every day, but then Joe says LMAO because Joe probably heard that for the first time. This is why you keep shooting your shot and you keep doing your jokes, because even if you've heard the jokes before, they're so good, you might get another chuckle, and a new person will definitely get a chuckle. That's it for me. Thank you, everybody, for being here. Appreciate it. Hope you guys enjoyed. See you tomorrow on some stream with somebody. We'll talk about something, even if no market open, market close. Bye, everyone. Have a good one. Love you all. Good night.